So I believe we are live. Just confirm about audio video so that we can start off with today's session. Guys, we are live. Just confirm me about audio video. Oi, shh. And you confirm me about audio video. Sir, we can hear you properly. All okay, sir. Good morning, sir. Audio video clear, sir. Absolutely clear, sir. You are looking handsome as well. Oi, hoi, hoi, hoi. Hoi. I just asked for audio video and you said handsome looking. Oh, ho, 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 ho. Nobody said it. I am saying to myself. I compliment to myself very frequently. If nobody compliments you, you should compliment yourself. If nobody compliments you, you should compliment yourself. Okay, okay. So, hello everybody, and welcome to this CA Fine Direct Access and International Taxation Powered Batch in full English. A very, very, very warm good morning to all of you present here. First of all, how you all are doing, please let me know so that we can start off our today's sessions. How you all are doing? Just message me out. We have with us Soumya, Satish, Diya, Sairam, and many other people silent who do not message in class. Good morning, sir. Audio video is clear. Yes, your face is looking clear. Your audio is looking clear. Everything looks very, very clear. Just our exam is not clear. We are just worried about our exam. Don't worry, don't worry, don't worry. Okay, 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 okay. Till yesterday, we had completed IFOS. Good, sir. How about you? Absolutely good. You know what? Yesterday only, when I had off, yesterday's class was off. If you are watching live, you must be aware of. If you are watching recorded, I'm just giving you a reference that yesterday it was off. I had to travel outside for some purposes, and you'll not believe it. It is 7:30 right now. We are taking this class. I had come home at 3:30. I had not slept almost when I was traveling. I didn't sleep. At 3:30, I came to house. At almost 4, we started off. I started off sleeping. At 7, I woke up. I just had 3 hours of sleep, and that is normal. Believe me, that is normal. I had only one option to cancel yesterday's class. I had no option of canceling today's class. Literally, I don't didn't have any option because syllabus is bound to be completed on time. I have this pressure of completing syllabus on time. I cannot be any slower in this. Therefore, with just 3 hours of sleep, I have to take this class. If you remember, on day first, I had told you that I am not using any chair or with back support. Even today, for entire 4 hours, I sit on plastic stool. What I'm trying to say is, of course, there are going to be discomforts. Of course, there are going to be some hurdles on your journey. Of course, there would be days where you won't be thinking of taking a class. I had an option to cancel today's class. Of course, I could have cancelled. But will that lead to any positive? Right answer is no. Your syllabus would delay. My syllabus to complete, my time limit for completion would delay. So sometimes now meeting deadlines with lesser sleeps is more important than having a better sleep. Sometimes meeting deadlines with lesser sleep is necessary. You have to do sometimes. Of course, health is important. I am fit. I am fit. I'm not just stretching my health. I am fit. But with that, I might have to stretch myself sometimes. Similarly, you too. There were days where you have to stretch yourself, where you might feel that I want sleep. I want to sleep for more hours. You might feel like canceling the class. It might happen. It will happen. In some days, now you will think, so just 1 hour of sleep. I'll join after break. It might happen, it will happen. But remember, what is at loss? Who is at loss? See, I will come, I will continue teaching. Who is at loss? Nobody. Just got it. ठीक है? Okay, okay. So we have to start with profit and gain from business and profession. Can you all make me recall what was the charging section of cap gain and what was the charging section of IFOS? We have studied two chapters. Both of them had some charging section. What was the charging section of cap gain, comma, what was the charging section of IFOS? Can you all tell me? Sir, capital gain had charging section 45 1, 45 subsection 1. Similarly, in IFOS, we had charging section 56 1. Similarly, for PGBP as well, we have charging section, that is section number 28, which talks about what all things would be taxable under that PGBP. From my point of view, this is very less relevant from examination's point of view. This is less likely to be asked in exam. But yes, it is important in itself for understanding PGBP. Beautiful dear. First of all, section 28 clearly states if you do business, if you do profession, even for a day in a previous year, that would go to PGBP. If I start teaching for a single day and I earn fees from students, provision says whatever the fees I would be earning, that is a profession done for a day. If I sell potatoes on the street, provision says selling potatoes even for a day amount to PGBP. Okay, sir. Second thing, provision is very clear about. Very clear about. If you are a partner and receives interest and remuneration from the firm, any interest remuneration received by the partner from the partnership firm will always be PGBP. It will never go to IFOS. It will never go to any other head. If any partner receives any interest or remuneration from the partnership firm, it amounts to PGBP, provided it is exempt for the firm. The firm has taken deduction of that, and therefore partner is receiving that. Okay? We will discuss this later on when we will study firm taxation. Our next chapter is that only. Third thing, any amount received on account of scheme and insurance policy is also a taxable under that PGBP. We had discussed this when we were studying IFOS. We took an example where Mukesh Ambani's health was of prior importance for Reliance. Yes. Therefore, Mukesh Ambani's, Reliance paid 100 crore rupees for the health of Mukesh Ambani. If anything happens to Mukesh Ambani, Reliance would receive 5,000 crores. So any receipt on account of scheme and insurance policy for Reliance would be taxable under that PGBP. We had also taken an example that if Reliance insures somebody who is a Bengali Baba at Himalaya, then in that case, expenditure would be disallowed and taxability would come under IFOS. We had discussed this. For example, you receive any grant subsidiary from central asset from central government, state government for business and profession. For example, you are doing a fertilizer business. And for fertilizers, you have been given some grant to buy things at a lower cost. You have been given grant by the central government, state government. Provision says whatever money you receive now, that is your PGP. Whatever money you received now, that is your PGBP. Whatever the grant you receive from central government, state government, that is PGBP. Sir, any perquisite, gift, benefit due to business profession, whether convertible in cash or not. Do you remember day before yesterday we took an example? In last session we took an example. If you remember, there was Sai Ram, who was Hindustan Unilever dealer, HUL dealer. And HUL had offered him a Thailand trip, if you remember, a Thailand trip worth rupees 60,000 rupees. And I had asked you whether it would be taxed or exempt. I had asked you whether it would be taxed or exempt. Sir, if you look at Sai Ram, and if you look this as a gift, it is not a movable property, therefore it is absolutely exempt. But sir, gifting provisions would not apply here only. Gifting provisions would not apply because it is a business relation. It is business relation between HUL and Sai Ram. In that case, whatever things you receive would be taxable under that PGBP. Whatever the amount of gift are, whatever the amount of gift is, FMV shall be taxable under that PGBP. Got it? Basic fundamental. Basic fundamental. If you do business and you receive anything on account of business, that would go to PGBP. If you do business and you get anything on account of business, that would be taxable under that PGBP. Sir, important. FMV of stock on conversion into capital assets. Oh, carefully listen now. For example, I am a property dealer, property dealer, paisa, property, property dealer. I have this beautiful mansion to sell. Beautiful mansion where I have room number one, room number two, room number three, room number four. Likewise, I have 15 rooms. 15 rooms, 15, 25 rooms I have. 25 rooms, 1 BHK rooms I have, which I want to sell. A sea facing villa, sea facing multi-story building. Oh wow. I'm a property dealer, I buy properties and then sell. One day, I felt like, what am I doing? What am I doing? I'm selling property to the real world and I am myself living in a very small hut. Living in a small hut. I want something for myself. I really want something for myself. I make homes for other people and I'm not living in my own home. I want something for myself. That day I decided the topmost floor will be now my house. Now my house. I decided that this topmost floor would be my house. Can I say this was earlier my stock in trade and this is converted to capital asset now? This was my stock in trade which is converted into capital asset. Yes. Yes, sir. Very true of you. Very true of you. We cannot relate more. Very true. If this was stock in trade, now it has been converted into capital asset. Don't you think that with effect from conversion, it should have capital gain impact? Till the time it was stock in trade, whatever income you would have had, it would be PGBP. The day you convert it into stock in the capital asset, it whatever income you would get, that would be capital gain. Therefore, on conversion, the date of conversion, whatever the FMV is, this FMV would be this stock PGBP for stock in trade, and whatever the FMV is, this shall become cost of acquisition of this capital asset. The same thing that we had discussed now, and conversion of capital into stock in trade, just things reversed. Everything reversed. If you have a stock in trade and you convert that stock in trade into capital asset, now whatever the FMV of conversion, FMV on the date of conversion is, that shall be taken for the purpose of PGBP. Got this point? AG, got this point. Got this point. Got this point. Export incentives. If you get any export incentives, for example, you get some cash assistance from government. For example, government insists you to produce more oil. How will you produce? You don't know. But if government insists you, incentivize you for producing more oil, provision says it is an income. If government gives you duty drawback, what is duty drawback, sir? Sometimes we paid customs while importing the goods, and we export the same, so we get some duty drawback that we have already paid. You already know this from IDT. So if whatever duty drawback income you have, that is your PGBP. At last, any sale of import entitlement. See, there are certain goods for which we are allowed to buy a limited quantity. For example, Rahul has a right to import carbon of rupees total 1000 kg I can import. I have a right to import 1000 kg of carbon. I just imported 800 kg. I am yet left with 200 kg of import carbon. I can import 200 kg more. Can I sell this right? Right answer is yes, you can sell this right. If you sell this right now, in that case, it is taxable under that PGBP. Whatever import entitlements you sell now, whatever income you receive, that is the PGBP. Nothing else but PGBP. You don't know. I'm telling you a real life case. Riddhi madam. Riddhi madam. That IDT wali mistress. IDT wali madam. Riddhi madam. There was a, there was a news coming around in the industry that her husband wants to teach DT. Riddhi madam wants to teach IDT. Her husband wants to teach DT. Riddhi madam will take costing as well. She will take the 3 subjects of CA final. What I will do, I will play Junjuna. Junjuna, you understand? That toy. Riddhi madam's husband is going to teach DT very soon. And you know what? There were rumors going on between Sarthak sir and Riddhi madam that Rahul sir should be taken off from fast. I'm telling you personally, I'm really telling you, this is very sad of me. This is very sad of me. What should I do? What should I do? I told the same thing in last batch. What they advised me, you know what? What they advised me. They said, sir, you should take money from Sarthak sir. You should take money from Sarthak sir. If he's expelling you, if he's taking you out because he wants somebody else to teach DT, you should take money. I took 20 lakh rupees from Sarthak sir as non-competition fees. Ultimately, I was teaching at fast. How can somebody else come? How can somebody else? Why? How can somebody come? Provision says whatever non-competition fees you have, whatever the money you receive from somebody for not carrying on the business, that shall become PGBP. Oh my God! Oh my God! Whatever money I receive for not doing business shall become PGBP. Oh my God! You know what? You know what? Listen, listen very carefully. Listen this point. The day I understood that I don't have to teach DT for next 3 months, 6 months, whatever it is, the day I got to know that I don't have to teach DT for next 3 months, 6 months, what I decided, I decided to teach everybody how to teach DT. Such a master stroke. I decided that I will teach everybody that how to teach DT. Everybody who is my student will become DT's faculty. For example, Soumya, for example, Satish, for example, Sainam, for example, Dia, everybody will teach DT. I will teach you how to allure students, how to make these beautiful notes, how to make beautiful question bank, how to support the students, how to interpret Bear Act. I started teaching these things. Sarthak sir went very angry. Arey sir, what is this? What is this? Why are you leaking out the secrets of AIR, one of our batch? How can you leak the secrets? He was very angry. I said, sir, there was agreement for not teaching, but I can share my intellect na, with others. How to teach? I am not teaching DT. I am teaching how to teach DT. Sarthak sir gave me 20 lakh rupees more for not sharing this intangible, for not sharing this knowledge as to how to teach DT. 20 lakh for not teaching DT. 20 lakh for not sharing as to how to teach DT. Oh dear God. Oh dear God. Sir, how come you think of these examples? Non-competition fees received for not carrying any business or profession. Second thing, not sharing any intangible asset that would go to PGBP. Whenever you receive any money, whenever you receive any money for not doing any business, and second thing, for not sharing any intangible assets. If I have been given money to keep my mouth shut, this is as good as money received to keep my mouth shut. I will not share any intangibles. I will not do any business. Whatever money I received, that would be PGBP. Done, sir. Done, sir. Done, 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 sir. Dia says to convert black money into white money, her husband started teaching DT. Yes, yes. Earlier there were travel vloggers on Instagram. If you know, there were travel vloggers. People used to travel, but right now culture has been couple travel vloggers have come. Husband and wife who move together, which attract more people. Similarly, they want to be a husband-wife jodi of DT IDT. Any doubt in IDT would be taken care of with Riddhi madam. Any doubt of DT would be taken care of by her husband. A husband-wife jodi. Arey Baba, just it is an example. Don't talk or don't say this to her. Please don't say this to her. Point number 9, hold a very beautiful point. Point number 9, what will be PGP? A very beautiful point. We'll discuss that tomorrow. An explanation to section 28. What is this explanation? Understand. See, whenever you have any house property, okay, and you rent that house property out, there are two possibilities. If you rent normally, that means whatever I do, that I do. But in addition to whatever I do, I rent out property. So whatever renting income is there would go to house property. Yes. But if it is my business of renting out, if it is business of renting out, if it is my business, I take properties, I buy properties and give it out on rent. I buy properties and give these properties out on rent. Will that amount to house property? Right answer is no, sir. There is a catch. If I have a business of renting out the property and I rent out commercial properties, commercial house properties, in that case, it would go to PGBP. But if I rent out residential house property, it would go to house property. This is important. Even my business is of renting out house property. My residential house property being rented will never go to PGBP. Ideally, whatever business I do goes to PGBP. Whatever business I do goes to PGBP. But if you rent out residential house property, it would never go to PGBP. This was the explanation added last year in Finance Act 2024. It is yet to be tested. Once it would be tested, now you will realize. You will realize how important this section is. In PGBP, they would give one adjustment and you will think again, again, again. See, what did I say? If you rent out the residential house property, it would go to PGBP. Always. Sorry, it would go to house property, always house property. Done, sir. Done, sir. We are done with charging section. We are done with charging section. Yay! What was there in charging section? Second part, there is something called speculative business. See, technically speaking, speculative business implies a business where you buy goods and sell goods without taking delivery of the goods. You buy goods, you buy shares, you buy commodities, you sell commodities without taking delivery. Goods were about to be received, and before receiving goods, you sold them. You bought shares and shares were about to be delivered, and before delivery, you sold them. You were about to receive commodities and you sold the commodities. Provision says these type of transactions are called speculative transactions. Ideally, what speculative implies or speculative imply intraday trading in real life. Intraday trading, where you buy on the same date, sell on the same date, where there is no physical settlement going on, that is called speculative business. Sir, why do we understand speculative business? Why there is a differentiation between regular and speculative business? See, speculative business, whatever losses you have now, you cannot set off these losses against any other businesses. For the purpose of loss set off, now these speculative business have been considered. Now remember, what did I say? You don't take delivery of shares, you don't take delivery of commodities. In that case, it is called speculative. But there are 4 cases where you don't take delivery, now it is not speculative. For example, you do hedging contract for raw materials. Here also you don't take delivery, but it is not speculative. You do forward contract. What is forward contract? Sir, for example, I have dollar payable after 9 months. So I do a forward contract that I want to buy dollar after 9 months at rupees 93 rupees. I have done this contract today only. This is a forward contract. Whatever forward contract you do, even you don't take the delivery, now it is not speculative. Third thing, you do derivative trading in recognized stock exchange. You do future and option trading, sir. It is not considered as speculative, because even if you don't take delivery, it is not considered as speculative. And at last, if you do commodity derivative trading on recognized stock exchange where you pay commodity transaction tax, it is not speculative. In addition to that, if you do agriculture commodity trading now, agriculture commodity derivative trading, in this case, even if you don't pay CTT now, still it is considered as normal business. It is not speculative. What did I say? Ideally, without taking delivery of goods, without taking delivery of shares or commodities, now, if you are selling any good shares, commodities, it is speculative. But there are 4 exceptions: trading in raw materials, hedging in raw materials, future contract, or forward contract, future and options contract on recognized stock exchange, and commodity derivative trading on commodity derivative trading where you have already paid CTT. These 4 are not considered as speculative. These 4 are not considered as speculative. Is it really important? I personally doubt that it is important. I really cannot understand how they can ask this point, but still, the point was I told. Section number 29. Section number 29. Section number 29. How to compute PGBP? How to compute PGBP? Section number 30. Rents, rates, repairs, insurance, and building insurance of the building. So this time I want to try something new. Like in capital gain, I had given you a master chart before starting the chapter. In PGBP, I don't want to give you a master chart. I want to give you a section list whereby we will understand what sections do we follow. Okay. I want to give you a section list so that we are aware of what we are, where we stand. I'm just giving you a section list, and at the end of the day, we will draw the section list of our own. We will draw the section list of our own. When we will be done with the chapter, I will write down every section and make you remember whatever the relevant sections are. Okay. First section that come our way is 28, that is charging section. Then we have 29, how to compute PGBP. Then we have then we have 30, rents, repairs, insurance of building. 31, rents, repairs, insurance of plant and machinery. Section number 32, we have depreciation. This depreciation can also include normal depreciation, additional depreciation, unabsorbed depreciation. Section number 33, AB we have, and ABA we have, which talks about tea, coffee, rubber business and petroleum and natural gas business. Do we have 34? Right answer is no, we do not have 34. Do we have 35? Yes. It is about scientific research. After 35, we have 35. AB, AB and ABB. It is about telecom license, oblique spectrum. Then we have 35 AD, specified business. I'm just trying it out. For the first time, I'm trying it out to write down the sections of PGBP and then we will study so that we are aware of where do we stand. It is a very big chapter now. It is a very big chapter. So we must be aware of where do we stand. For that matter, I'm writing down the sections just to try to brain map what we are doing. Sir, after 35 AD, we have 35 triple C, CCD, 35D. It talks about agri extension project. It talks about skill development project. It talks about preliminary expenses. We have 35 DD and DDA. It talks about amalgamation expenses or voluntary retirement scheme. After 35, we had 36. This talk about certain deductions. 36, 37, we have general deductions. 38, 39, we don't have in our syllabus. Then we have 40A, IA, TDS non-deduction. Then we have 40A2, related party transaction. 40A3, cash payments. 40A5, non-monetary perks. 40A7, gratuity payment. Then we have section number 41, deemed PGBP. Then we have 42, not in our syllabus. 43, 43A, we have asset acquired in foreign currency. 43, forex gain or loss. 43B, expenses on payment basis. 43CB. We don't have CA, we have CB. What is it? Construction, public service, contracts. 43D, NPAs. 44 single A we have trade associations. 44 double A, we have books of accounts. 44 AB, we have tax audit. Then we have 44 AD, ADA, A. We have presumptive taxation. Then at last we have 44 DA, that is royalty FTS of non-resident. This is a section list. You don't have to learn every section, of course. Of course, there are only few sections that I will make you learn towards the end. There are only 8 to 9 sections that you need to learn. Otherwise, you can skip out every other section. Every other section you can skip out. And out of those 8 to 9 sections, you must have already learned 6 or 7. Only 1 or 2 I will request you to learn new sections. Okay. 1 or 2 new sections only I will request you to learn. Otherwise, you are aware of almost all the other sections. Right away, starting from how do we compute PGBP, section number 29. Section number 29 clearly states how do we compute PGBP. Section itself doesn't know. Section says go to section 30 and go to section 43D. Whatever section 30 to 43D says, you have to compute accordingly. Wow. Like you go to table number 5, this says go to table number 4, like that. Section number 30, what it says, if you pay any rents, repairs, rates, insurance of a building. For example, if I pay rent of a building, will that be allowed? Of course, sir, it will be allowed. If I pay rent of a building, will that be allowed? Of course, it will be allowed. What harm there is in paying rent, sir? It is absolutely allowed. Sir, what if I pay the rates and taxes? Sir, what are rates and taxes? See, ultimately, taxes are municipal taxes, like taxes you pay, water taxes, municipal taxes. Rates is a term not used in India, but it is used in foreign countries. So, word is given. If you pay rates as well, that is also allowed. Whatever taxes you pay, that are also allowed. Sir, whatever repairs you do on building. For example, there was some plaster breakages we spent on plaster repairs of plaster breakages. Sir, any kind of revenue expenditure is allowed. But what if I do a capital repairs? For example, I construct a new story as a whole. I constructed new bathroom, new balcony, entire capital expenditure I do. Provision says it is not allowed. Whatever capital expenditure you do, it is added to cost of the asset. It is not allowed expenditure. Sir, whatever insurance you buy, that is also allowed. Okay. Rent paid allowed. Repairs, capital repairs won't be allowed. Revenue repairs would be allowed. Any taxes paid allowed. Any insurance paid is allowed. These are allowed expenditure under Income Tax Act. Now listen carefully. Sir, what if I pay rent to myself? Will that be allowed? I take out rent from one of my pocket and keep it to other pocket, saying that I am paying rent to myself now. I take out that money from PG, but I will take as deduction under PGBP. What, go to house property and take 30% standard deduction again? Can I pay rent to myself, take out money from one of the pocket and put it in the other pocket? Can I do that? Provision clearly denies. Provision clearly denies. Rent paid to an outsider has to be there. If you are the owner of the property, you don't get deduction of rent paid. You don't get deduction of rent paid. Okay. Section number 31, what it says? If you pay rent, repairs, insurance of plant and machinery. If you have any plant and machinery, you pay rent on that, sir. Of course, it is not. It is allowed. Of course, it is allowed. If you do any repairs on plant and machinery, any revenue repairs is allowed. Any capital repairs is not allowed. Any capital repairs is not allowed. If you do any insurance, it is allowed. Of course, sir, it is allowed. But sir, Again, in plant and machinery, if I take out rent from one of the pocket and give it to myself only, can I pay rent to myself? Sir, what thing you are talking about? What thing you are talking about? Paying it, people do in real life. People do in real life, and even examiner gives you owner paid rent to himself. Owner paid rent to himself, sir. It is not allowed. Okay. In addition to that, sir, what if partnership firm pays any rent to partner? It is allowed. It is allowed. Partnership firm paying any rent to partner, it is allowed. But in that case, we have to assume that it has to be reasonable. It has to be reasonable. Otherwise, it is absolutely allowed. Wow, sir, how beautifully we are done with two sections. We are done with two sections. Wow, sir. Wow. Wow. Done with two sections. Oh my God, sir. Oh my God. Come on to depreciation. A very important topic, always asked in exam and sometimes difficult even. First of all, whenever you maintain books of accounts as per Companies Act, as per any accounting standards, whatever the depreciation on assets you calculate, income tax disregards such depreciation. Income tax disregards such depreciation, and income tax allows you depreciation as per Income Tax Act Section 32. To claim depreciation under Income Tax Act, now there are certain prerequisites you must follow. First of all, sir, you should be owner of the asset, or if not owner, you should be beneficial owner of the asset. Sir, is there any difference between being owner and beneficial owner? See, beneficial owner implies I bought the asset, but I have given it on rent to somebody else. So I might not be. I'm a beneficial owner in this case. If I have paid money to acquire the asset, I am the beneficial owner. But if I have paid money and I have asset right now, that means I am owner. Provision says, in case you are owner or in case you are beneficial owner, in whatever case, you will be given depreciation plus such asset shall be used in business. Okay. Such asset shall be used in business. You are owner, beneficial owner, and you should be using that asset in the business. Second thing, what income tax says now? Income tax says depreciation is a mandatory charge. Sir, what if I don't want to claim depreciation? I want to increase my profits. I want to pay more taxes. Can I do so? Depreciation is a mandatory charge. Depreciation is a mandatory charge, sir. You cannot escape depreciation. It is bound to be, reduced from your PG. Sir, no depreciation is charged on land, goodwill, or any financial instrument. If you have any land, it is not a depreciable asset. If it is a goodwill, government prohibits depreciation on goodwill. If you have any financial instruments like share securities, you are not given any depreciation on that as well. Sir, depreciation under Income Tax Act is available from the date you asset put to use. Under Income Tax Act, the day you put the asset, now you can claim depreciation from them. Sir, before that, you are not allowed any depreciation. Sir, from ready to use, under accounting standard only, you are getting depreciation from ready to use date. But Income Tax Act, now we do not get depreciation from ready to use, rather we get from put to use. But sir, there are three assets on which you get depreciation on ready to use basis. What are those three assets? First of all is standby equipments. What does that mean? For example, right now I have this pencil. All of a sudden, in between of the class, this pencil stops working. I have a backup pencil with me. That backup pencil is not being used right now, no, but still it is eligible for depreciation because it is a standby equipment. For example, I have fire extinguisher kept at my office. I do not use that fire extinguisher. No, of course. How can I wait for fire extinguisher to be used? I might never ever require that. In that case, on fire extinguisher as well, you get depreciation from it. From the date it is ready to use. And sometimes we have machinery server, whatever the machinery servers we have, you get depreciation from ready to use date. So ideally, what did I say? Depreciation is allowed from the date you put the asset into use, but in three cases, that is on case of standby equipments, in case of fire extinguisher, in case of machinery server, you get depreciation from the date you you ready to use. Sir, if you partly own an asset, then only your share would be allowed. For example, I and Dia do a business jointly. I mean, not jointly, but I do a separate business. Dia does the separate business. We both use the common machinery. Provision says whatever your share in the machinery is, you will get depreciation only on that. If you and Dia have jointly acquired the asset, You do your separate businesses. Provision says whatever your percentage of asset is, that percentage of the depreciation you would get. Sir, in case of lease agreement, what happens? In case of lease agreement, there are two parties to a transaction. One is lessor, who owns the asset, and he gives the asset to lessee. In lease agreement, there are two parties. First is lessor, who owns the asset. The other party is lessee, who receives the asset. Provision says depreciation shall be allowed to lessor only. Depreciation shall be allowed to the lessor only. That means the owner shall get the depreciation. Lessee will not get any depreciation. Lessee will not get any depreciation. He will not get. So then it is a loss to him. No, sir, he will get rental payment. Of course, he is lessee now. He is paying the lease rentals. He is paying lease rentals. So he would get deduction on lease rentals. He would not get any deduction of depreciation. He would get deduction of lease rentals. Okay? What did I say? Five conditions. Five conditions. See, this is a chapter which is, the more you will try to speak up now, the more you will retain this chapter. First of all, you will get depreciation when the asset is used in business and you are owner or beneficial owner. It is a mandatory charge. You don't get depreciation on any land or goodwill. You get depreciation from the asset you put to use. But in case of three things, that is machinery, standby equipments, or server, you get depreciation from ready to use. If you partly own an asset now, then you would get depreciation only on your portion. And at last, if it is a lease agreement, then lessor can claim depreciation and lessee can claim rental expenses. These are some basic pointers you must be aware of depreciation. How depreciation is calculated, sir? Under Income Tax Act. Under Income Tax Act, I am asking you just to note, and right now, not note down things, but something you have to note down later on. I will tell you. I will ask you to share me. I will ask you to share me. Remember, not now, but these depreciation rates, whatever. If you are able to note it down. I will ask you to share. Under Income Tax Act, all the assets have been categorized into four classes. What are these four classes? First of all is building, furniture, plant and machinery, and intangible assets. All the assets that you can think of, all the assets that you can see around you are categorized in either of the four categories, either of the four classes. Under the same category now, under the same class, we have different types of blocks. Sir, for example, building, we have three blocks. First block is 5%, second block is 10%, and third block is 40%. What is this block? Block is nothing like a bucket. What is there in the block? For example, if you have any commercial building, for example, you have any general purpose business, for example, you have any office business, all these buildings would go under the 10% block. Whatever the 10% block is now, you would put every asset that falls under this cat block into this bucket, and you will not get depreciation on a single asset. You will get depreciation on a block as a whole. For example, normally what you do now, you get depreciation on individual asset system. You buy an asset, you calculate the useful life, you calculate the scrap value. Based on that, you get depreciation every year on this individual asset. But in Income Tax Act, we do not get this. We get a block method. Block method implies whatever the asset that fall within the same block are put into same bucket, and in that bucket as a whole, you get 10% depreciation. That is the block system. Now, how many blocks are there? It is important. Under building, we have three blocks: 5%, 10%, 40%. Plant and furniture, we have only one block, that is 15%. Plant and machinery, we have three blocks: 40%, 20%, and 15%. And intangible, we have one block, that is 25%. Under each of the block, there are certain assets that are given. We need to learn at least a few. What are those? Understand. Sir, block number one, that is residential building. If you have building and that building is used for residential purpose, sir, it will be taxed at the rate. It will be depreciable at the rate of 5%. It will go under 5% block of building. If you have any commercial building, general purpose building, office building, whatever it is, sir, it would be depreciable at the rate of 10%. If you have any temporary structure or if you have any wooden structure, sir, it would be depreciable at the rate of 40%. Under building, we have three blocks. First of all is residential building, 5%. Other building, general building, it will be depreciable at 10%. Temporary structure would be depreciable at 40%. Temporary structures would be depreciable at 40%. So done. Very simple point. We are clear with this point. If you have any furniture now, if you have any furniture, for furniture we have single block only. We have single block of 10%. Every furniture that you see around will be depreciable at the rate of 10% only. If I have doors, it is depreciable at 10%. If I have any, this table, the table on which I am teaching, a stand. In addition to that, remember, if you have any electrical fittings, wires, switches, these are also depreciable at the rate of, in case of, these are also called furnitures only. For example, tube light, if I have in my house, if I have a tube light, LED lights, these lights are nothing but furniture, a part of furniture only. These are not plant and machineries. Sir, if you have any fittings, for example, electrical fittings, the wires that flow within the house, the wires that are there within the wall, these are electrical fittings. These are also a part of furniture only. Switches, the on and off, tick tock, the button that you do, the button you try to hold in middle. These all things are part of furniture only, and you get depreciation at the rate of 10% on this. You get 10% depreciation on this. Class 3, plant and machinery, we have three types of block. Block number 1 is 40%, block number 2 is 20%, block number 3 is 15%. See, in block number 1, 40%, we have 6 assets. I want you all to learn these 6 assets. I really want you all to learn these 6 assets. First of all, sir, if there are any aeroplanes or aero engines. If you have any aeroplanes or aero engines in your business, these are depreciable at 40%. Second thing, if you have any computers, computer computer software or computer related devices, for example, UPS, printer, scanner, these are computer related devices. These are also depreciable at 40%. If you have any books, books are also depreciable at 40%, or annual publications, these are also depreciable at 40%. For annual publication implies, sir, for example, Income Tax Act. If I have Income Tax Act 2025, today I have Income Tax Act 2025, it is relevant today, but 1 year later on, it will be of no use, no? When Income Tax Act, sorry, the new Finance Act would come, this old Income Tax Act would become irrelevant. For that matter, books are depreciable at 40%. You have pollution control devices. If you are in a factory and you have pollution control device, it is depreciable at 40%. If you have a renewable energy device, for example, if you have solar panel on your head rooftop, if you have any electric vehicle, so these are depreciable at 40% in it. Last, if you have any medical equipment, for example, you have a BP machine, blood pressure measuring machine for your employees. This is also depreciable at 40%. 6 assets I spoke. 6 assets I spoke which are depreciable at 40%. First of all, try speaking after me. Sir, aeroplanes and aero engines. Computers, computer softwares and related devices. Third thing, any books. Fourth thing, any pollution control device, renewable energy device, and medical equipment. These 6 assets are depreciable at 40%. Under 20% category, what would fall? Provisions is if you have any ship, if you have any vessels, if you have any boats or any speed boats, whatever you have, that this would be depreciable at 20%. Under third block, 15%. Provision says whatever is remaining will go to 30%. Third block, that is 15%. A general plant and machinery mentioned, it would go to 15%. If you have any more normal vehicle, it would go to 15%. If you have a mobile phone, it would go to 15%. If you get a EPA BX, it would go to 15%. What is EPA BX, sir? If you remember, there were telephones. If you have seen any cartoon show, there were telephones in which there were numbers were used to round. Were used to circularly round the numbers. There was a big telephone where you used to circularly round the numbers to call. Those devices are called EPA BXs. If you have any mobile phone, if you have any EPABX, if you have any motor vehicle, if you have any oil well, if you have any office appliances, if you have any other asset, if you have any other asset, it would go to 15% depreciation. It would go to 15% depreciation. If you have any intangible asset now, if you have any intangible asset, it would be depreciable at 25%. It would be depreciable at 25%. Sir, motor vehicle, we have something special. Motor vehicle, we have something special. What special is there? Listen, if you have bought a motor vehicle for normal day-to-day businesses, for example, I am a garment dealer I require motor vehicle to bring customers to my shop and I escort them to their normal places. This is not what my normal business is. I require motor vehicle from day-to-day businesses for my day-to-day businesses. For that matter, I have bought now provision says you will get 15% depreciation. If you buy a normal motor vehicle, you get 15% depreciation. But sir, if you had taken motor vehicle on 30th August 2019 till 31st March 2020, that means just a few days before COVID beginning, 2020. Before 2020, if you have bought this motor vehicle now, you would get a depreciation of 30%. Normally 15%, but if you bought in this golden period just before COVID now, you would get depreciation of 30%. Similarly, if your business is of renting out motor vehicle, you rent out motor vehicle. For example, I bought a car and I have started a car teaching business, car driving business. Or if I've taken car and I give cars on rental basis. If somebody wants, he can take car at 2,000 rupees per day, 3,000 rupees per day plus petrol charges. I take these cars. I took this car and use this for my business purposes. Provision says in this case, it is depreciable at 30%. And if you had acquired this car in this golden period, that is just before COVID, 31st March 2020, then in that case, 45% depreciation is allowed to you. Similarly, for windmills as well, sir, if you have bought windmill before Modi government coming into power, it was depreciable 15%. If you got windmill after Modi government coming into power, it will be depreciable at 40%. Oh. So this is about depreciation. I want you all just come and have a small notings of what the depreciation rates are. A small noting. Right now, don't write. I will give you some time to write down. First of all, just have a look so that you are able to revise. Not you should not focus on writing right now. Focus on recalling. First of all is sir building. Under building, we have three classes. First of all is residential building, 5%. We have general purpose, office, commercial building, 10%. We have wooden structure or temporary structure, it is depreciable at 40%. If we have any furniture, 10%. Furniture shall include any wires, switches, any fittings. Then we have plant and machinery. Under plant and machinery, we have three blocks. First of all is 40% wala. 40% we had six devices. Six, try recalling. First of all was aeroplanes, aero engines. Then we have computers. We have books. We have renewable devices. We have pollution control devices. We have medical equipments. Under 20%, we have boats, vessel, speed boats. The rest is 15%, that is residuary. (15% is residuary. Under 15%, what do we have? Sir, you can have a motor vehicle. You can have a mobile phone. You can have a EPA-BX. You can have an oil well. You can have any other plant and machinery. And last one is intangible asset. It is depreciable at 25%. In these, we have some special cases like motor vehicle. If it is it is normal business, then you get depreciation 15%. But if you have acquired this on 30th August 2019 to 31st March 2020, you get depreciation 30%. If it is your renting business, normally you get 30%. But if you have bought in this golden period before COVID, then 45%. And at last, We have windmill. Before 1st April 2014, it was 14, it was 15%, and later on it jumped to 40% later. These are the all depreciation rates. Were you able to understand? Were you able to recall depreciation rates? I want you all not just to learn this, but just write it of your own. Once you should be writing this. Once it is out of your hands now, once your hands have a habit of writing these things, you will be able to understand. You will be able to recall these things quickly. Write this down and send it to me on Telegram channel. It is 8:29. You have 4 minutes in hand. You have 4 minutes in hand till 8:33. You have to send it. In 4 minutes, you have to send it. What? Yes, sir. You have to send this me on Telegram after writing this. Oi, idhar. Have a look. You have to draw this down. You don't have a choice. You have to write them down. It is 8:30. I'm giving you time till 8:35. Sir, who takes this much time in revision batch just to make students write? I do that. I do that. Whatever things will take me to write you, I will make you. I will make that. I will do that. The depreciation is the most underrated topic. Believe me, you will not realize the value of this chapter right now, value of this topic right now, because you are thinking like we know na depreciation, we know na, but most of the students do mistakes wrong when it is a difficult part. When depreciation is tricky, people fail to do it. People are not able to solve it. It horrifies me. It honestly horrifies me that students who think that depreciation is their strongest point are not able to solve an exam. I got a message from Dia. Dia, something wrong. Dep- in case of motor vehicle used for renting business, if you buy in that golden period, you get 45% and normally 30%. You can correct that. You can correct that. Perfect. Beautifully written, Dia. Beautifully written. Soumya, Nice. Soumya has done some shortcut, but very, very well written. So मैं make sure in others paragraph in plant and machinery, others you write down mobile phone, EPABX, you write down oil well, you write down these things so that you are able to recall this thing. At an exam, na, you are not forgetting that what is the depreciation rate for mobile phone, EPABX. Sometimes they ask EPABX. Just write it down so that you are aware of what you should remember, what you should be remembering. Okay, I got from Lubna. Beautiful. Well done. Very well done. What others are doing? It is already 35. Does it take more than 5 minutes to write this much? Does it take more than 5 minutes? I personally doubt. And what you are doing, record it once. Oh, you don't have a break time. Huh? You have to write it, record it once. It is not a break time. It is serious matter going on here. You will forget these depreciation rates. And if you were so confident to write it off if you think that you already knew this, just write it down without looking at the screen. Write it down without. If you are not able to recall, na, that means that is a doubt. You are confident and your confidence is hollow. If you are not able to write without looking at the screen, na, you think that you know, but in fact you don't know. Sign arm sent me. Income tax, all assets. Okay, perfect. Okay. Tax service, computer, pollution control, medical equipment. Sign arm under 40%. You forgot books. You forgot books under 40%. Perfect. Books, I think you have not mentioned rest. Everything seems good to me. Done. Done, sir. This was the entire block. So these were the blocks. Every percentage that you have written is a different block in itself. All the 5% buildings, all the 10% buildings, all the 20 or 40% buildings will be in different blocks. All the furnitures clubbed together, all the 40% plant and machinery, all the 20% plant and machinery, all the 15% plant and machinery will be clubbed together. Whenever you buy an asset, it would be indifferent that the asset will not have its own identity. Its asset's identity would be 15% plant and machinery. This is the way you do block. Sir, in power generating business, now, if you are into power generation and distribution business, you have an option to go for SLM method. Perfect sign up. Under power generation business, you have an option to go for SLM method as well. See, right now we have WDV method, we are following written down value on block of asset system. But in power generating business, we have this SLM method. We will discuss this later on. Calculation of depreciation. How do we compute the depreciation? Sir, like we had 4 classes, and in each class we had different blocks. In each class, we had different blocks. Every block wise, you have to calculate depreciation. For every block, you have to calculate depreciation separately. How it is calculated? Take the opening value of the block. Take the opening value of the block. Add any additions. If you have added any asset, if you have acquired any asset during the previous year, you have to add them. But sir, whenever you acquire any asset, now it is added into 3 parts. What three parts? If you have acquired that, and if you have acquired an asset and put to use for 180 days or more, if you have put to use for 180 days or more, then it will be added separately. If you have acquired an asset and put to use for less than 180 days, then it is added separately. And if you have acquired and not put to use, now it is added separately. So whatever additions you have done, now it will be added in three folds. Whatever the asset you are selling, whatever asset you are selling, sales price is to be reduced. If it has been discarded, then insurance money is to be reduced. If it has been transferred in if it has been transferred in slum sale, then WDV is to be reduced. This will give you WDV for the purpose of depreciation. On this WDV, depreciation will be charged. This is the WDV for the purpose of depreciation. On this depreciation would be charged. How much depreciation? Remember. Assets that have acquired and not put to use, which are not used. During the year, these assets are not used. On these assets, you would get no depreciation. You would get no depreciation if these assets are not used. You would get no depreciation. In addition to that, if asset is acquired in the year, acquired in the current year, and have been used for less than 180 days, you get half rate depreciation. For example, you are doing calculation of 15% plant and machinery, so you would get 7.5% depreciation here. 7.5% depreciation you would get here. Balance WDV, balance whatever the assets remain, you would get full rate depreciation. Got it? This is the amount of depreciation actually allowed. After you reduce the depreciation, you would get WDV, closing WDV. What did I say? For every block, you have to do this separate calculation. How calculation will be done? You would take the opening block of asset. Whatever the assets are there opening, you would take that. If you have acquired any asset, now you would add that into three folds, three parts you would add. First of all, if any asset is put to use for more than 180 days now, or 180 days or more, you would add it. Second thing, if it has been added for less less than 180 days, you would add it separately. And if it has not been put to use, now you would add it separately. In three parts, you are going to add them. Once you add all of them, now you would reduce the sales price of the asset. If any asset has been transferred in slum sale, then assets WDV would be reduced. This would give you WDV for the purpose of depreciation. After WDV for the purpose of depreciation, you would reduce depreciation. How much depreciation? Asset not put to use, no depreciation. Asset put to use less than 180 days, half rate depreciation of the block. And remaining WDV, you would get full rate depreciation. Got it, sir? Some questions I want you all to answer. First question. Can you tell me a cutoff date? Can you tell me a cutoff date? For example, if you buy asset on 1st September, you would get full rate depreciation. If you buy asset on 2nd depreciation, 2nd September, you would get half rate depreciation. There must be a cutoff date now. There must be a cutoff date. The date on which you put to asset, it would be counted as one for 180 days put to use. And if you use it after that, it would be less than 180 days. There would be cutoff date. Now, can you all calculate for me? Lyubna says 3rd October. Right answer is, let's see other people say. 3rd October, Lyubna. If I am correctly pronouncing your name, if I am mispronouncing, do correct me. Sometimes my pronunciation towards name might be wrong. I'm not familiar with the South Indian names. Okay. Dia also says the same thing. Right answer is yes, sir. 3rd October is the cutoff date. Yes, 3rd October is the cutoff date. What is the cutoff date? See, if you acquire and put to use on 3rd October, you will get full rate depreciation. You would get full rate depreciation. If you acquire and put to use, you will get full rate depreciation. But sir, if you put to use on 4th October, you would get half rate depreciation. Because putting to use on 4th day, it would mean that you are using less than for 180 days. So 3rd and 4th, if you acquire and put to use up to 3rd, it would be full rate. If you acquire up to on or after 4, it will be half rate. It is better to write it down somewhere. If you have taken my book, it is already written. If you have not taken book, just write it down somewhere that 3rd October is the cutoff date. 3rd October is the cutoff date for full rate. 4th October, if you put to use, then it will be half rate. Clear to everybody? Another question. Another question. Very carefully answer. Very carefully answer. I have a building whose opening block was 10 lakh. Acquired during the year zero. Sold building closing WDV or cap gain or any depreciation. What would be the answer? If I have a building in my opening block whose WDV is 10 lakh rupees, I have a building in opening block whose WDV is 10 lakh rupees. I sold that building for 3 lakh only. I sold that building for 3 lakh only. I sold that building for 3 lakh rupees only. But SDV of building is 15 lakh rupees. How much would I be reducing from block? Or will I have any capital gain? Or if not capital gain, how much depreciation will I be getting in the year end? Oh, we never thought of this way. How much will be the closing WDV? If closing WDV exists, then how much would be depreciation? If not, if you think that there would be no WDV, what would be the capital gain amount? Let me reframe that in a more sensible manner. Tell me either we will have closing WDV or depreciation versus we will have capital gain. Wow. Soumya says we'll have a closing WDV of 5.95 lakh. Soumya. Soumya says since we sold it for 3 lakh rupees, so 3 lakh would be reduced. 7 lakh would be the closing WDV and you would claim 10% depreciation from that. How did you arrive at this figure? I didn't understand. Soumya, right now we did the exercise. Right now we understood. Right now we understood depreciation rates. Just tell me, did you apply 15% depreciation rate? Did you apply 15% depreciation rate? Lyubna says 5, 630. Did you apply 15% depreciation rate, Soumya? If I would have been a regular class teacher in a face-to-face classroom, I would have asked you to become what we call uh, that hen. If you would have been in my class now, I would have I would have made you the hen. I mean, what do we call it in South India? That murga banwana. I would have asked you to do that. If you have used 15% depreciation. Sairam says no, sir. It will be capital gain. WDV is negative, no depreciation. What other people think? Other people don't think anything. Sir, we are just here for listening satsang. We are not here to respond. We are just here to listen. What is there into responding? Being silent is the best thing that we can offer to ourselves. Are Baba, is this only building in the block? Yes. An assumption. If you have not assumed, then to answer, I will say. Satish says closing WDV nil, and we'll have capital gain of 5 lakh rupees. Okay. My question to all of you, first of all, my question to all of you, sir, this is not something very clear to answer. Yeah, one thing I forgot to mention that is it the only asset in the block? Is it the only asset in the block? Only asset? If it is yes, if it is yes, assuming that you have answered, assuming that it is only asset, assuming that it is the only asset, then what would happen? Sir, it is not relevant. SDV is not relevant for the closing WDV. SDV is not relevant for the closing WDV. You will have closing WDV, but you will not get any depreciation because there is no asset in your block. There is no asset in your block. This closing WDV will be relentless. This would be irrelevant. This will be dead WDV. If you don't have any asset, it is a dead WDV. In addition to that, you will still have capital gain. You will still have capital gain of 5 lakh rupees. You will still have capital gain of 5 lakh rupees. Sir, for the first time, I'm telling you this thing. Whenever asset is in the block now, always remember a thumb rule. You have to only reduce the sales price. That's it. If that asset has been sold, you will reduce the sales price. If that asset has been given for free of cost, you will reduce zero. If that asset has been demolished, you will reduce zero. If the asset has been destroyed, you will reduce zero. If you received some insurance money, you will reduce the insurance money. That means while calculating block, it has to be understood that only sales price is reduced, and that is the thumb rule. It has to be accepted that only sales price will be reduced. So will we have a closing WDV? Right answer is yes, sir. We will have a closing WDV. We will have a closing WDV. Yes, we will have closing WDV. If we have closing WDV, na, in that case, what would happen? If we have multiple other buildings as well, we will continue depreciation on this 7 lakh. If we don't have other assets, this 7 lakh would become dead. This will be dead WDV. We don't have any use of this. Sir, in either of the case, sir, we will have capital gain because WDV is not fulfilled. Na? We have not sold it at WDV. So full value of consideration for that asset would be full value of consideration for that relevant asset would be, sir, full value of consideration for that relevant capital asset would be 15 lakh rupees. Cost of acquisition would be WDV of that asset. WDV of that asset, whatever the WDV turns out to be, we will have capital gain as well. Oh my God. Oh my God. So this is something we understood. Neha. Oh, ho, ho, Neha, for the first time. Hello. How are you? Full value of consideration will be 15 lakh. Cost of acquisition will be WDV. We have studied this in capital gain. We have studied this in capital gain. And this will also give you short-term capital gain or whatever capital gain it is. We'll discuss that. Got it? Clear to everybody? Clear to everybody? What do I have to do? What is the takeaway, sir? Whatever the gyan that you have given, whatever the extra knowledge you have given, just one takeaway or two takeaway, I should say. First takeaway is if asset is sold, discarded, demolished, whatever it is, you will reduce the sales price from the WDV. You are not going to be carried away by the SDV. You are not going to carried away. You are not going to be carried away by FMV. You might be given multiple other data sets as well. You are not going to get carried away. If it has been given for free of cost, you will write zero. If it has been demolished, you will reduce zero. You will only reduce the sales price. First thing, that is the bottom line. Second thing, if the block has been exhausted, now there will be separate capital gain calculation, and the capital gain calculation will be separately done. You don't have to use this SDV for the purpose of reducing block. Block will be reduced by sales only. Done, sir. Now my question. Now another question. Another question. Let's see how many of you can answer this point. For example, Rahul acquired a plant and machinery falling in the block of 15% on 1st Jan, or I should say previous year 25-26. Put to use lesser than 180 days. How much depreciation I am going to get, sir? Of course, 15% depreciation. Yes. How much depreciation I am going to get? 15%, sorry, 15% divided by 2, that means 7.5% depreciation I would get. Yes, 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 sir. Got it, got it. What if I didn't put to use, acquired in previous year 25-26 and not put to use? Oh, not put to use. Sir, will I get any depreciation? No depreciation. Okay. If I acquired any asset and not put to use, I will get no depreciation. So the same asset I put to use in previous year 26-27. Next year I am putting this asset into use. Next year I am putting this asset into use, and next year I am putting it use for less than 180 days. How much depreciation will I be getting? 15% or 7.5%? How much depreciation I would be getting? See, if I acquired asset in current year and did not put to use, I will not get depreciation in current year. But if the same asset I'm putting use in next year and that too for less than 180 days, how much depreciation I will be getting next year? Full rate or half rate? Dia says, sir, full rate. Dia says, sir, full rate. Lyubna says full rate. Satish says full rate. Nobody is into 7.5%. Are you everybody fully sure? Soumya says full rate. Neha says full rate. And for your surprise, not for your surprise, actually, you all are correct. It will not be half rate. It is good point. It is good that you know. But what the point is, Sairam also says full rates. It is pertinent to mention, it is important to mention that this half rate is depreciation. Half rate of depreciation is only applicable for year of acquisition. If in year of acquisition, if you put that asset to use for less than 180 days now, then only you get half rate depreciation. From next year onwards, if you put to use for less than 180 days, more than 180 days, it is available for entire one. It is available for entire depreciation is available. Sir, full because first condition less than 180 days and then put to use in that year. Yes, yes. And there is and word. Huh? The year of acquisition and put to use has to be same. Then you get half rate depreciation. But year of acquisition is previous year, last year. And you put to use in this current year for less than 180 days now. So in this case, you are allowed full rate depreciation. Got it? Got it? Till now, we understood two things in depreciation. First of all is the rate of depreciation in first part. In second part, we understood how do we compute depreciation. How do we compute depreciation? Okay. In third part, we are understanding how do we compute capital gain in case of sale of asset. If we sell an asset, how do we arrive at capital gain? Should we? See, assume all the cases. Assume all the cases. Huh? For example, in opening, I have two assets worth rupees 1 lakh. I acquired three assets for 2 lakh. Right now, I have five assets of 3 lakh. Case number one. I sold all assets. I sold all the assets. All the five assets I sold. Sir, it might happen that I sold all five at 5 lakh rupees. It is possible. Just logically think. Just logically think. You had five assets of 3 lakh rupees, and all these five assets you sold for 5 lakh rupees. Wow, you are a genius. You are a genius. Sir, you got a profit. Can I say it is a profit of 2 lakh? Can I say it is a profit of 2 lakh? Yes. Provision says it is nothing but short-term capital gain. It is a short-term capital gain. Sir, why short-term? Why capital gain? Don't worry, I will discuss that with you all. Why short-term? Why capital gain? I will discuss with you all. But sir, if you have 5 assets and you sold all of them for 5 lakh rupees, then you have a benefit now, so it is a short-term capital gain. Sir, what if you have all the assets and you sold all 5 at 1.5 lakh only? I'm a Sindhi, I'm a Sindhi, and in Sindhi we have a saying called thukkatai. Thukkatai. I say thukkatai. All the 5 hands together, and you just say this on this face. Thukkatai. In anger, we say that. Thukkatai. This is the word. You have assets of 3 lakh rupees, 5 assets worth rupees 3 lakh rupees, and you sold all of them at 1.5. Achi, athu, very bad person, very bad. Chi, 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 chi. You have 5 assets of 3 lakh and you are selling all of them at 1.5 lakh. How come you will become a businessman? How come you will become a businessman? You are not a businessman, you are a loser. If you are selling all the assets, you have a loss of 1.5 lakh, and this loss is nothing but short term capital loss. Why short term? Why capital loss? Leave things on me. I'll come on that. I'll come on that. Sir, what if I have 2 assets acquired for 1,000, opening 1,000? I have acquired 3 assets for 2 lakh rupees. Right now, I have 5 assets for 3 lakh rupees, and I sold just 2 of them for 4 lakh. Can I sell it? Can I sell 2 assets for 4 lakh rupees? Yes, I might be very genius. I might found an opportunity. I have found an opportunity to sell these assets at a higher price. It is possible. Provision says then you are the super genius. You are a super genius. Super genius. In this case, sir, 5 assets worth 3 lakh rupees, and out of them, only 2 you sold. You sold only 2 at 4 lakh. That means you have got a benefit. You have got a benefit of 1 lakh rupees. This is nothing but short term capital gain. Why short term? Why capital gain? I will discuss. Sir, I am left with 3 assets. What do I do? Kuch nahi. This will be dead assets. No depreciation on that. Last point. If I have 2 assets of rupees 1 lakh, I bought 3 more for 2 lakh rupees. Right now, I have 5 assets of 3 lakh rupees. I sold 2 of them for 2 lakh rupees. Now I am left with 3 assets. I am left with 1 lakh of WDV. Sir, no capital gain. Depreciation shall continue. Depreciation shall continue. What did I say? I said almost 2 things. There are instances where all of your assets are going to be sold. All of your assets are going to be sold. In that case, you might have short-term capital gain, you might have short-term capital loss. But sir, if not all the assets are sold, it might happen that you are left with WDV, you are not left with WDV. If you are not left with WDV, you will have short-term capital gain. If you are left with WDV, you will have depreciation being continued. This is the entire point. This is the entire depreciation. Entire depreciation. Sorry, entire capital gain in case of depreciable assets. You might sell all the assets. If you sell all the assets, you might have profit, you might have loss. That will be short-term capital gain, short-term capital loss. If you do not sell the entire assets, if you do not sell the entire assets, you sold only a few assets, but sale value is much more than WDV, then you will have short-term capital gain. You will have short-term capital gain, and if WDV remains, asset remains, then depreciation shall continue. Simple, sir. Very simple, sir. Yes, sir. Very simple. Not technical at all. So just tell us one thing. Just tell us one thing. Why in the God's name we took this? Why in the name of the God we took the short-term capital gain and short-term capital loss? Why short-term capital gain? Why short-term capital loss? Why not business loss? Why not business loss? Why short-term capital gain? Why short-term capital loss? See, I'm telling you basic rationale. If you are able to understand, then well and good. If you are not able to understand, it is not relevant. See, first of all, if there is a machinery in business, is it a capital asset? Is it a capital asset? Sir, a capital asset is nothing but three things. A ULIP is a capital asset. A securities by FII and AIF are capital asset, and any other asset is a capital asset. Any asset. Like machinery is a capital asset. Is it stock in trade? No. Is it movable plus personal? No, sir. Depreciable assets are not personal. Is it rural agriculture land? Is it gold deposit bond? No, sir. Therefore, machinery is a capital asset. Machinery is a capital asset. So any gain arising from transfer of capital asset shall be capital gain. Therefore, there has to be capital gain. No strings attached. There has to be capital gain. Capital gain will surely come. Capital gain will surely come. The issue here is government does not want to give 12.5% tax rate benefit to you. Government does not want to give 12.5% tax rate benefit to you. Why government does not want to give? See, government does not want to give because when you claim depreciation, you were reducing your taxes by 30%. When you were claiming depreciation, your taxes were reducing by 30%. With depreciation, with every rupee of depreciation being claimed, in on every if you claimed a depreciation, every rupee was being saved. On every rupee that you were saving 30% of taxes. So why do you think that government is going to allow you the long-term capital gain? No, sir. Government is going to allow you. Government is going to tax it as per normal rate only. If you were saving taxes at normal percentage, 30%, so therefore government would tax you at slab rate only, and there is only short-term capital gain which is being taxed at slab. Therefore, government charges it as stock short-term capital. It is not long-term because government doesn't want to tax you 12.5%. Government wants to tax you as at slab. Lubna, sir, in the last case, there are three assets left now. Why don't we charge depreciation on unsold assets? We will charge, no? We will charge. Depreciation shall continue, Lubna. Depreciation shall continue to be charged on the unsold assets. On these three assets of WDV of 1 lakh, every year you will get, see, if it is machinery, you will get depreciation on 15,000 rupees. You will get depreciation. Depreciation shall continue. No capital gain, depreciation shall continue. This is what the point is. Got it? Understood why it is capital gain? Understood why it is short term? Okay, thank you, sir. Okay. Understood why it is capital gain and why it is short term? Sir, what do you do this? What do you do this? Look into my eyes. My eyes, your eyes. Look into my eyes. Is it clear to you why it is short term, why it is capital gain? Come on to fourth part. Depreciation majorly has six parts. First of all was rates. Second one was calculation. Third one was capital gain in case of depreciation. Fourth one is nothing but additional depreciation. If you know how to draw a skull. Got it, sir. Got it. Got it. Ji, got it. If you know how to draw a skull like this, draw it. If you don't know how to draw a skull like this, draw like this. But do draw. No, sir. Why do we draw skull? We will draw like this. Why, sir? Because there are most often cases that you'll not even remember that depreciation, additional depreciation is to be charged. A pinky promise, write it down even if a pinky promise. A pinky promise. Whenever you see word manufacturing, you have to be reminded of additional depreciation. Additional depreciation is a point of which people forget to charge, which people don't even realize that they have to charge. Got it? Additional depreciation is to be charged on the, sorry, in case you are into manufacturing concern. Remember, in case you are into manufacturing concern or production of any article, you produce any article, you can even do printing and publication. Printing and publication is also considered as manufacturing. If you are into power generation business, power transmission business, power distribution businesses, in all these three cases, whatever the new plant and machinery you buy, sir, new plant and machinery, means new only, no second hand plant and machinery. New plant and machinery you buy now, you get 20% of additional depreciation. 20% of additional depreciation in first year. Remember, additional depreciation is given to you in first year, not every year you get. Only for first year you get additional depreciation. That to 20%. Remember, if asset has been put to use for more than 180 days or equal to 180 days, then 20% entire additional depreciation will be given to you. But if it has been used for less than 180 days, then 10% additional depreciation in current year and 10% additional depreciation in subsequent year. Sir, what if we did not put to use? Arey Baba, then you will not get depreciation. If you did not put to use in current year, you will not get additional depreciation current year. Sir, if you put to use it next year for less than 180 days, then entire 20% will be given to you next year. Okay. So put to use for 180 days or more, in that case, 20% additional depreciation. If you put to use for less than 180 days, then 10% in current year and 10% next year. Sir, whatever plant and machinery you buy now, that should be installed in factory premises, factory premises, factory premises. Can you install any of the appliances in office? No, sir. Sir, if there is any residential accommodation in nearby your factory, you buy ACs in that residential accommodations, will that be allowed? No, sir. Any asset bought for office, any asset bought for residential accommodation, you are not allowed any additional depreciation on that. If you have claimed 100% deduction on any assets, you will not be given additional depreciation. If you buy any travel vehicles like motor vehicle, motor car, you are not given any additional depreciation on that as well. You are not given additional depreciation on ships, aircrafts, or any transportation vehicle. But sir, if you buy any forklifts, truck, any lorries, on those you are given. Forklift truck means a truck that is used for pick these goods and just to drop it somewhere else. These are forklift trucks. You get additional depreciation on forklift truck. You get depreciation. You get what did I say? Okay, you get additional depreciation on forklift truck, and apart from that, you get it on lorries. Okay. Is it necessary to claim the depreciation in the year of acquisition? Yes. Yes. Depreciation is a mandatory charge. In addition to that, additional depreciation is also. See, if you take it, then you can take it. If you don't, I guess additional depreciation in real life, you can miss out that. You can miss that out. If you don't want to claim additional depreciation, you can skip that point as well. I mean, I have seen people skipping. Legally, it is a mandatory charge, but people skip out additional depreciation. Very often they skip out. Now, my question, if you have acquired an asset, a plant and machinery for 100 lakh, depreciation for current year is 15 lakh. WDVs 85 lakh. On what value you will get additional depreciation, on this 100 lakh or 85 lakh? On what value you will get? Arey Baba, I'm not talking out of my own. This is the question that people ask. Sir, if you already claim depreciation on an asset, then will we get additional depreciation on cost or WDV? On what amount we will get additional depreciation? Sir, it is always cost. Always cost. You get additional depreciation always on cost. And that too only in first year. Perfect. Dia said the same thing. Neha said the same thing. Soumya, Lubna said the same thing. Now let me make it difficult for you. Acquired asset on 1st Jan 2026. Acquired asset on 1st Jan 2026. So current year depreciation would be, sir, 7.5%. That means 7.5 lakh. Yes. Additional depreciation 10% would be given to you. 10% would be given to you. That means 10 lakh. Yes. That means closing WDV will be 82.5 lakh. Yes. Next year depreciation would be, sir, 82.5 lakh into 15%. Sir, 12.375. What will be the additional depreciation next year? What will be the additional depreciation next year? What will be the additional depreciation next year? Beautiful, 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 beautiful. Sir, it is always given on cost. I am trying to confuse you, but it is good that you are stuck to basics. It is always calculated on cost. So next year also you will get 10 lakh, not on this WDV, not on last year's WDV, not on any other thing, only on cost you get. Beautiful, beautiful, Saira, Rubna, Soumya, Dia, Neha. Very, very good. Where were you till now, Neha? I saw your name for the first time. Where were you? Fifth part of the depreciation. There are six parts to depreciation. There are six parts in depreciation. Sir, first of all, we understand how do we calculate the rates. Second part, how do we compute the depreciation? Third part, we understand sale in a capital asset. So, in fourth part, we understand how do we calculate additional depreciation. In fifth part, we understand how do we compute the cost of an asset. Whenever you buy a asset, you have to incur certain expenditures. For example, transportation charges. For example, freight you have to incur. For example, you have to pay GST as well. Sometimes you run trial expenditure. What all expenses are added to cost of the asset? Section 43(1) deals with that. Provision says whatever the purchase price is there, now that is added to cost. That means price paid to vendor. Whatever price you paid to vendor, now that is added to cost. Whatever price you pay to vendor, that is added to cost. If any installation charges paid, transportation charges paid, any trial run test expenses if you have incurred, now that is also added to cost. Any taxes on which there is no ITC available, for example, custom, no refund available, it is added to cost. GST, if no ITC is available, it is added to cost. If ITC is available, then it is not added to cost. If you have received any government grant to acquire any asset, for example, for solar panels, you get subsidy. If you get subsidy from government, then it is reduced from cost. Or if you sold any goods made on trial run basis, for example, you made a machinery, you bought a machinery for soaps. You did some trial run, you incurred 5 lakh rupees of trial run expense. You produced 10 lakh of soaps and you sold that soaps for 10 lakh rupees. So provision says 5 lakh of cost would be added to cost, 10 lakh of sales price on soap or sale of soaps will be reduced. Simple point. During this entire process, if any expenditure has been incurred exceeding 10,000 rupees in cash to a single person in a single day, that will not be added to cost. If any price paid to the vendor is paid in cash, it is not added to cash. It is not added to cost. Any freight, any depreciation, and any telecommunication charges or whatever thing you pay in cash, that is not added. Sorry, transportation charges. Any expenditure you incur in cash now exceeding 10,000 rupees to a single person in a single day is not allowed. Is not added to cost. It is not added to cost. Okay. Sir, what this point will give? Section 43(1) will give you what amount is to add it to block so that we can claim depreciation. We want to claim depreciation now. Bottom line is we want to claim depreciation. My point is on what value we will claim depreciation. This is what is dealt by section 43(1). This is what it is dealt by 43(1). Cost, direct expenses. This will give you the amount that will go to WDV for the purpose of depreciation. Yes, sir. This is what will go to WDV for depreciation purpose. But there are certain special cases in which now you don't buy assets or you try to claim higher cost to claim WDV. In that case, what will be the amount added to block for the purpose of depreciation? We have some good cases to discuss. Come on to case number 2. Example. For example, I am a property dealer. I'm a property dealer. Again, the same example that I took in the bonding. I have 25 1 BHK flats. So since when 1 BHK flat window starts looking circular? Arey Baba, it's my flats. Flats, rules. The topmost flat I decided to keep for myself. And not for residential purpose. I wanted to make it my office. I want to make this office at the most top floor. The most sea facing floor will be my office. Anybody who visits will be visiting to this office. Can I say that I have converted stock in trade into capital asset? Yes, sir. You have converted capital asset. You have converted this is stock in trade into capital asset. And the best part is, sir, it is a capital asset which is a depreciable ones. So you would get depreciation on this as well. Since the date it has been converted, you will get depreciation on this as well. My question to you is, on what value we will get depreciation? What will be the value? How do we arrive at value? Because we have not bought this now. We have converted this from stock in trade into capital asset. On what value we will get depreciation? Can you all tell me? Just out of your common sense, just tell me what value we will get depreciation on. Beautiful. Oh, oh. Soumya says FMB. Neha says cost. Oh. Lubna says FMB. Sairam says FMB. Dia says FMB. And right answer is FMB only. Neha. In the morning, we had discussed this point that if you convert the capital asset to stock in trade, now that FMB on the conversion date shall become your PGBP for the purpose of stock in trade. And that FMB shall be relevant for your further transactions, for your cost of acquisition, for your depreciation purpose. That conversion FMB is the most relevant thing. I hope you got the point. You know what? You will not understand this point. I am telling you one personal thing. You know what? Okay, sir. I'm telling you very personal thing. You must be thinking overacting started. No, it's not overacting. This is very personal. I take classes in the morning at 7:30. I take these examples. Sometimes I shout, sometimes I become angry, sometimes I make these facial expressions which are not accepted by everybody. You know, this society will not accept these facial expressions. I take classes in my room. My sister sleeps beside me. When I open these lights, when I switch these lights on, now she becomes angry. When I shout in the class, now my father becomes angry because my sound reaches his room as well. He became very angry. He became really angry with me. He says, Rahul, what is this? What is this behavior? Till when you will do this? In morning you will take these classes in the house, in the room. Till when you will do that? Is it something good? Is it something good? Do something meaningful. I said, Papa, I'm doing this meaningfully. Students enjoy these classes. Are Papa, but who I am, we are not enjoying now. Your shouting is making us ill. You are not letting us sleep in the morning. Now who will tell Papa it is good to wake up in morning? It is good to wake up in the morning. But the fact is, he didn't agree to wake up at morning. What he did, you know what? He did. Like, this is our house. He expelled me from the house. He expelled me from the house. Everybody is expelling me. He expelled me from the house. And he gave me keys to his new house. He said, do not ever take classes here. I am giving you a house in front of our house. On the first floor, do take classes there. On the ground floor, do the printing work, do the back end work, whatever back end work you want to do. I'm giving this house free of cost to you. I'm giving this house as a gift to you. Do your entire business there. Do not take it at home now. We are not able to sleep. Whenever you want to go to class, you want to take the classes now, you can take this house. You can go to first floor, switch on the lights as much as you want, shout as much as you want, make facial expressions as much as you want. Whatever back end work you can do at ground floor. Oh wow, sir. Oh wow. My question to all of you, is this house a capital asset? Is this house a capital asset? Right answer is yes, it is a capital asset. Am I eligible for depreciation? Yes, sir, it is a capital asset. It is a depreciable asset. I am eligible for depreciation. Third question, at what value I will get depreciation? At what value I will get depreciation? What will be the value on which I get depreciation? Depreciation. On what value I will get the depreciation? Sir, willingly or unwillingly, you take us towards the example and how beautifully you read. Arey, thank you, thank you, thank you. Just answer this thing. Just answer this thing. Soumya says, and Neha beautifully answered, sir, if your father acquired this house for 40 lakh rupees, you would get depreciation on 40 lakh rupees. If your father acquired for 40 lakh rupees and he claimed some depreciation and for him WDV was 25 lakh rupees, you would get depreciation on 25 lakh rupees. So if your father has claimed a depreciation, his WDV would become your WDV. If he has not claimed depreciation, his cost would become your cost. Are you able to understand? Now you can say, wow, what a beautiful examples are you taking? What beautiful examples you take. I will not deny, I will not say anything to you. Listen, 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 listen. Focus, focus up. If Rahul requires an asset, I want an asset which is worth 1 crore rupees. An asset it is worth 1 crore rupees. I willingly bought this asset at a higher price, 10 crore rupees. Because if I have bought it for 1 crore rupees, I got depreciation of 15 lakh. But if I buy the same asset at 10 crore rupees, I would get depreciation of 1.5 crore. Oh my God! If I buy asset at a very high price, I will get the higher depreciation. Higher depreciation. Wow, such a master stroke. Provision clearly states that if you buy an asset with a intention to claim higher depreciation, na, Joint Commissioner will allow only the FMV to be taken as cost for the purpose of depreciation. Listen, another example, beautiful example it is. For example, we have a plant and machinery whose WDV is 10 lakh rupees. I sold this plant and machinery at 10 lakh only. Will there be any capital gain? Will there be any capital gain? Sir, WDV was 10 lakh, sales price was 10 lakh, whatever it is, sir, WDV was 10 lakh, sales price was 10 lakh, there would be no capital gain. No capital gain. Sir, but I wanted that machinery, so I reacquired that machinery for 50 lakh rupees. Oh my God. Oh my God. Oh my God. Sir, if I have an asset of 10 lakh rupees and I sell that for 10 lakh rupees and I acquire it for 50 lakh rupees, same asset I'm acquiring the same asset for 50 lakh rupees. On what value will I be getting depreciation? On what value will I be getting depreciation? Do you think that government is going to allow me depreciation on 50 lakh rupees? Sir, we personally doubt. Government is not going to allow. Government will give you depreciation on this 10 lakh rupees only. Government is going to give depreciation on this 10 lakh only. What if I change the answer and I say that I reacquired this asset for 5 lakh rupees? Now, on what value government is going to give the depreciation? On what value government? So this time government will give out 5 lakh. So can we draw a point that government allows depreciation on WDV at time of WDV at the time of sales or reacquisition cost, whichever is lower. WDV at the time of sale or reacquisition cost, whichever is lower. Oh wow. Oh wow. Beautiful Dia. Beautiful Dia. Beautiful Neha, Soumya. Very nice. Lyubna. Very nice. Now answer this question. This is the most beautiful part. The most beautiful part. Try answering this. Rahul has an asset. Has a profit of 1 crore rupees. I have an asset of 1 crore rupees. Oh wow. Oh wow. Oh wow. There is person called Dia. She has plant and machinery of 3 crore rupees. and I acquired that plant and machinery for 3 crore rupees. Okay. On this plant and machinery, I claimed a depreciation 15%. That means 45 lakh depreciation I claimed. And what I did, I leased it back to her. Leased back to her. That means, in essence, I do not have an asset. I do not have an asset. I do not have an asset. Are you getting me? I bought the asset and leased it out to the same person just to claim the depreciation. First of all, my question is, will government give you any depreciation benefit or not? Are you going to get a depreciation benefit or not? That is the first question. Are you going to get a depreciation benefit? First question to all of you. Are you going to get a benefit of depreciation? Are you going to get depreciation? In fact, you don't have an asset. You might be wrong, but it is worth being wrong because here it can be okay to be wrong. Later on, it won't be. And believe me, the opportunities to answer will reduce with the batch progressing. Because right now, you already know things now. You already know PGBP because you have studied that in inter, you have studied in final as well. But later on, when we'll come on assessment, I'll not ask these many questions. In PGBP, I'm asking, but in business trust, I won't. Sai Ram says no depreciation. No depreciation. Lyubna, Neha, Satish, Dia says yes, we will get the depreciation. The right answer is first of all, we will get the depreciation. Depreciation will be given. Why, sir? In fact, we don't have an asset. Arey Baba, why are you considering that he in fact has no asset? Just think of it that way. Na. He has paid 3 crore rupees to acquire the asset. He has outflow of 3 crore rupees. He has outflow of 3 crore rupees. He is the owner of the asset. And if you think that he is just getting a bogus expense, just think of it. He would also get lease rental as well. Na? He would also have income of rental as well. Na? So that will be counter. That will be countered. Don't worry. If he is claiming depreciation, he will also have rental income as well. So that will be countered. Got it? So depreciation will be given to you. But on what value depreciation will be given? So depreciation would be given on 3 crore rupees. If I change this question and I ask, Dia had this plant and machinery as 3 crore rupees, and I bought this plant and machinery for 6 crore rupees. On what value I will get the depreciation? In this case, I will get depreciation on 3 crore rupees only. I will get depreciation on 3 crore rupees only because if you have bought an asset and leased back to the same person, now whatever his WDV is, ultimately his WDV is considered, his WDV is considered for the purchase price. So we will get depreciation on his WDV only, maximum depreciation on his WDV only. Listen very carefully. Our next point is very important. Very dicey. People are confused at this point like nothing. Listen up. If I have a building, if I have a computer, I acquired building 4 years back for 10 lakh rupees. I acquired computer 4 years back for 60,000 rupees. Both the things. I acquired for the same price, almost same price. Almost same time. I acquired both of them at same time. This was also for personal purpose. This was also for personal purpose. 1st April 2025. I decided to bring this building to my business, and I computer also I brought it into business. On what value I will get depreciation? Value added to WDV. WDV for depreciation. On what value I will get depreciation? What will be the value on which you will get depreciation? If you know the answer, try answering of your own without referring to book. Neha says cost. Lyubna says the fantastic answer. Fantastic answer. I will say this later on. Soumya says WDV. Sir, the best part is on building it will be WDV. On building it will be WDV. But on computer now, it will be cost only. On cost. Why, sir? Why this differentiation being done? Why this discrimination being done? No reason. Government does not want to give you any more depreciation because buildings are at a higher cost now. Provision is very clear. If you bring any building to the business now, which was earlier used for personal purpose, you have to depreciate it notionally and bring it to the notional WDV. On that only we will give you depreciation. But other assets you can take at cost. If you had acquired 5 years back at 60,000 rupees, even today you can claim it at 60,000 rupees. But the building has to be depreciated notionally. So at what rate we would be depreciating? Today rate might be different, but in that year rate would have been different in the year of acquisition. Provision says in current year rate you are going to depreciate. That means for 4 years, minus 10%, minus 10%, minus 10%, minus 10%, something 6 lakh, something it would come, it would be added to cost. This amount would be added to cost. Building was used for other purpose. Original cost minus notional depreciation with current year rate will give us actual cost. Other purposes, this we will discuss. 3 points I want you all to hold for some time. We will come on this point as well. Asset acquired out of the borrowed fund. Sir, in lease example, who will get the depreciation benefit? Lease example we got now. Leisure will get. Lyubna, we will get the depreciation. If we bought that asset and leased it out to the same person, we will get the depreciation benefit. But for us, we will get rental income as well. But samne wala lessee will get rental expenses only. So we will get depreciation as well. We will get rental income as well. So it will be countered. Okay. Sir, if you have any asset acquired out of the borrowed fund, now what happens in case of borrowed fund? See, in India's or in accounting standard, you are aware that if an asset is acquired out of the borrowed fund, then till the date asset is ready to use, whatever the interest expenditure you incur, that is added to cost only. Borrowing cost, India's 23, if I am not mistaken. India's 23 borrowed cost. If you have incurred any expenditure, interest expenditure, till the date asset is put to use, then whatever the interest expenditure is added to cost. Same thing we have in income tax as well. If any asset has been put to use, till the date it is put to use, any interest expenditure incurred on such asset is added to cost. Any interest expenditure is added to cost. 35 ED, hold on for some time, we will come on this. If any GST has been paid on any asset, if ITC is not available, it is added to cost. Grant and custom, if you have any custom, if you have paid any, the 35 grant and subsidy, what it says, if you have any subsidy received for the asset, it is directly reduced from the cost. It is directly reduced from the cost. Sir, if you have used the if you are into scientific business and regular business, now what the issue is, if you are into scientific business now, you get 100% deduction on the assets you acquire for scientific purpose. Now, if you transfer these assets to your regular business, do we get any depreciation, sir? We don't get any depreciation. Nothing will be added to WDV, nil will be added to WDV. So this is about cost of acquisition in special cases. I hope all these special cases are clear except for a few pointers. See, this is how we study. I'm just referring you again. The things that are less relevant, now we go a bit fast, but the things that are relevant, which require your attention, I seek your attention, I seek your response, and then we proceed further. Now we shall take a break. It is 9:38. You can take break till 10:05. You can take a bigger break. Plus minus 2 minutes shall also work, so that you are rejuvenated well, since topic has to be interesting. So a bigger break is okay to me as well, to you as well. See you guys after the break. Yes. Welcome back from break. Are you guys back from break? Hanji, are you guys back from break? Yes. Yes, sir. Absolutely, we are back from break. Sir, did you take very long break? I normally take longer breaks only. See, honestly, now to be honest, whenever we go for power batches, one thing I've experienced that even though whatever the depth, whatever the quality, whatever the fun we have, now it is difficult for sit. It is difficult to sit for continuous 4 hours. Really difficult. So for that matter, what I have decided, na, ki breaks has to be good. First of all, second thing, a humble request as to not use any phone during the break. You should not be using any phone, any digital device through which your eyes should constrain. There should not be any usage. I request you all. I will request on regular basis not to use any mobile phone. If you want to hear songs, that's okay. But if you're using any other thing, that would never re-energize you. Remember, I had one option initially to make this batch longer and have a 3 hour class regularly. I had this option. But for that, with that, what will happen? Your study period would reduce. Therefore, I'm increasing the size of lecture. That means 3.5 hour, 4 hours, whatever that is. I will take that lecture only. But I will give a longer break so that you are able to re-energize yourself. From tomorrow onwards, when we'll have a class on fast tap, na, whatever recordings that will be there, na, we will be having recordings in two parts. That is lecture 6A and 6B. Each lecture of 2 hours so that you are psychologically less burdened with a bigger lecture. Okay. Bottom line. Sir, bottom line is not to use mobile phone during the break. Not to use. No web series, no stand-up comedy, nothing. Just songs. Just songs are enough. See, you are not able to value the class. You are getting concepts, you are getting question answers, you are getting unnecessary jokes as well. You are getting life fulfilling gyan as well. You are getting DPQs checked. What else you want? What else you want from the batch? Do you want me to write exam as well? If I could write, I would have written as well. If I could write your exam on your behalf, now I would have written for sure. One thing I am wanting from you all is to share these classes with your friends. Just sharing. Sharing is caring. Okay, sir, ठीक है. We will share, of course, huh? We will share. If you will not share, na, listen, something bad will happen. Something bad. What bad will happen? You will, you are about to reach your office at 10 p.m., 10 a.m., and all of a sudden, when you are about to just reach the lift, now your lift will stop working, and you have to climb 10 floors by walking. Aditya says, "Sir, is Baba Sehgal?" Oh my God, Doctor Sehgal, Doctor Sehgal. Listen, these type of bad things will happen. You are about to rent a cab and cab wala's tire is going to puncture if you have not shared it with your friends. Okay, sir. Everything kept aside. Where do we stand right now, sir? We started off with PGBP. In PGBP, we understood that we had started depreciation, and still right now, even depreciation is going on. In depreciation, we started off with rates that I made you write as well. After rates, we came on to calculation portion. Is After calculation, we came on to sale of capital asset. After sale, we came on to additional depreciation. After that, we came on to cost of acquisition. These are the 5 pointers we have discussed in depreciation till now. Next point, we have others. In others as well, we have 4 or 5 pointers. We will discuss one by one. First of all, if any asset is partly used for business purpose and partly used for personal purpose. Sir, for example, I have a car. On daily basis, I take this car to my shop, and on weekend basis, I drive it to some outskirts. I drive it to my farmhouse and use that car. Provision says if 40% of the car is being used for business purpose, only 40% of depreciation would be allowed in business. If car has been used, say 60%, then 60% depreciation would be allowed in business. Simple point. Depreciation to the extent of asset being used in business will only be allowed in business. Second point, I want you all to hold for some minute, even though it is very senseless point, but we'll discuss after the chapter is over. Point number 3. Now participation is very important. Do participate in this and you will enjoy this. You will really enjoy this and you will take something new. This will be a value addition for you all. Just participate. Sir, for example, if I had bought a machinery, it is 1st April 2026. I bought a machinery in dollar on credit for 10,000 US dollar. Yes, sir, it is 10,000 US dollar on the date of acquisition. On that day, because of somebody's guessing, dollar's rate is 80. That means, can I simply say that not 80 but 90? 90. That means initial recognition will be done at 9 lakh rupees. Simple point. Days passed, and it was 31st March 2026. A beautiful night to remember. A night where I had to make the payment. Where I had to make the payment on that day. $10,000 was supposed to be paid by me. And because of somebody's grace, dollar went to 95. Dollar went to 95 G. I had to pay 9,50,000 rupees. But sir, you had already recognized this value at 9 lakh rupees. You have recognized asset at 9 lakh rupees. Now you have to pay 950. So the extra 50,000 that you are paying, what will happen? Sir, will it transfer to P&L or will it be added to cost? What will happen, sir? Will it be transferred to P&L or will that be added to cost? What will happen to this extra 50,000 that is being paid? What will happen, Ji? What will happen? Beautiful. Very nice. Satish says added to cost. Dia says added to cost. What other people say? Sir, they say let other people answer. Then we'll answer. Sairam says, see, do not ever get into pressure of looking at somebody else while answering. When we will have classes on app, na, I will disable each other's chat. I mean disable as in one will not be able to see other chats while answering. I will disable this point. Huh? Lubna says. Soumya says. Everybody says it is added to cost. Right answer is yes, it is added to cost only. Whenever we have any foreign exchange gain or loss on account of any capital asset, then such gain or loss is always adjusted from block of asset. It is either added to block in case of loss or it is reduced from block in case of gain. Any gain or loss on foreign exchange in case of depreciable asset is adjusted from block. Simple thing. One general question I'm asking. Participate and you will get some point from this. For example, same case, we have with us Sairam. Sairam acquired machinery on 1st Jan 2026 on credit for 10,000 US dollar. And on that day it was 85. It was the US dollar was 90 rupees. $1 was 90 rupees. This was the exchange rate. Okay. But Sairam was already aware that there is something wrong happening in the economy. What might happen in future, we are literally not aware. And the best part is, we are literally not aware about what might happen. So he took a forward contract. He bought a forward contract. Okay? He bought a forward contract. To buy dollar at rupees 95 rupees. To buy dollar at 95 rupees. Since he is very certain that he has to pay 95 rupees, he recorded at 95 only. He recorded at 95 only because if you are aware that you have to pay 95, you will record at 95 only. On that day, on the date of payment, that is 31st March 2026. On the date of payment, sir, dollar fell short. It was 89 rupees. It was 89 rupees. Dollar fell. Now, what Sairam had to do? Sir, Sairam had to honor this agreement. He cannot escape. He has to honor this agreement. He has to pay differential amount of 6 rupees and he can buy the dollar at 89 rupees. So ultimately he has to pay 95. Sir, what happened to this 6 lakh of, what happened to the 60,000 rupees loss? This 6 rupees loss that he has incurred on 10,000, the 60,000, what will happen? Sir, will this be added to cost or will this transfer to P&L? Will this be transferred to P&L or will that be added to cost? What will happen, sir? What will happen? Will this be added to cost or will this transfer to P&L? Beautiful, Satish. Added to cost, Satish. Soumya, yes. Sairam, yes. Yes. What other people say? What other people say? Sir, other people don't say anything. Lubna says the same thing. Even though technically you are not wrong. Technically you are not wrong. Everybody said technically the right answer. But just tell me one thing. Just tell me one thing. Sir, I had already recorded asset at 95 lakh, 9.5 lakh. I have already recorded asset at 9.5 lakh rupees. If I already knew that I had to pay 95 rupees, I had already done a forward contract. I had already recorded at 95 lakh, 9.5 lakh rupees. If on the date of the payment, I bought 89 rupees plus 6 lakh rupees loss incur, 6 lakh is to be adjusted. Ultimately, my block would become 9.5 lakh only now. My block would become 9.5 lakh only. Getting me? If I recognize asset as 89 plus 6 lakh rupees loss, I would add up. Ultimately, my block would become 9.5 lakh only. Are you getting this point? If I am required to acquire, if I'm required to record asset at 89 and I incur loss of 60,000 rupees, ultimately my block is 9.5 only, and I had already recorded block at 9.5, then why there is a need of adjustment? Why there is need for adjustment? Right answer is, in this case, there will be no need of adjustment, nothing to add to cost, nothing to transfer to P&L because whatever requirement is done, we had already done now. We had already done. Got it? Got it. This was the some. This was a technical. This was a common sense, to be honest. Not just common sense, but just a brainstorming. What is asked in exam? What is asked in exam? You will be given that an asset is acquired for 65 lakh rupees. Hedging loss is of 2 lakh on forex. You will be required to calculate the depreciation. So on what value? 65 lakh plus 2 lakh. You simply have to do it. Technically, you have to add it. This was coincidence, right? Right answer is this was coincidence. Ideally, in real life, this isn't the coincidence. If you record assets at the price on which you have done forward contractor, no adjustment is required. But if you record at current price, then adjustment won't be required. This is what happens in real life. But in exam, what is going to be asked? Diya, listen to this. In exam, what you have to do? Asset was acquired for 65 lakh rupees, and 2 lakh was the foreign exchange gain or loss. It was loss. So you have to record asset as 67 lakh rupees and you have to claim depreciation. You have to claim additional depreciation on this point only. In exam, you just simply have to add the loss, reduce the profit. Simply you have to do that. Okay. I've just given you a concept biter that is done in real life. But otherwise, in exam, if there is any loss, add it to the cost. If there is any profit, reduce it from the cost. Done? Done, sir. Perfect. Now try answering me. Try answering one question as well. One question, one more question. One more question. Only Anna, one more question. For example, this is a sign limited. It has asset of 10 lakh rupees. A plant and machinery depreciable at the rate of 15%. On 1st June 2026-25, it acquired another plant and machinery at the rate of 5 lakh. Again depreciable at 15%. On 1st October 2026, Sai Limited amalgamated with Shady Limited. On 1st Jan 2026, this amalgamated Sai Limited, Shady Limited bought another asset of 7 lakh, depreciable at the rate of 15%. How depreciation is accounted for in case of amalgamation? Amalgamation it is, demerger it is, succession it is, conversion it is, whatever the conversions type of thing happen, how depreciation is considered in this case. Let me make it very clear to you. Very clear to you. Whenever there is a succession happening, amalgamation happening, conversion happening, demerger happening, first thing that you have to do, reasonably first thing you have to do is ignore this. First thing that you have to do is ignore. Assume there has been no amalgamation, no demerger, no succession, no conversion. Assume. How much depreciation would be calculated assuming that there has been no such thing done? Sir, on this 15, on this 10 lakh, we would get 1.5 lakh depreciation. On this 5 lakh, we would get 75,000 depreciation. On this 7 lakh rupees, we would get depreciation of 7 lakh into 7.5%. That means 52,500. Yes. First thing that you have to do is ignore the amalgamation, ignore the demerger, ignore anything, ignore the transaction. You will calculate depreciation as if nothing has happened. Second thing, what you are going to do is, second thing, you have to apportion this depreciation based on number of days this asset has been used. For example, this 10 lakh plant and machinery has been used till 1st November of 1st October, 1st October, that means almost 182 days here, not 182, but 180 is on 3rd, 182, 182 days here and 183 days here. This is how the split would be. This is how the split would be. So this 15 lakh will be divided based on 183 days depreciation will be claimed by the Sign Limited and remaining depreciation would be claimed by Shady Limited. Sir, the asset that has been acquired in between the year, for the number of days this asset has been used by Sign Limited and for the number of days it has been used by Shady Limited, it will be split. For example, in Shady Limited, it is used for 182 days, but in Sign Limited, it is not used for 180 days, 183 minus 61, it is just used for 122 days. Provision says this entire depreciation will be split off between the two. Sign Limited will take the depreciation for 182 days and Shady Limited would take depreciation of 122 days. The number of days this asset has been used by each of the entity will be given. So this third depreciation, what will happen to this? This new asset, 50,500, this asset has been wholly used by new entity. So entire depreciation would go to new entity. Did you get it? Did you get this point? Did you get this point? Whatever assets you have now, you will calculate depreciation as if there is no amalgamation being done. After amalgamation, now what will happen? You will split this depreciation into number of days each asset has been used. If asset has been an opening, you will divide it by number of days that entity is into existence. If asset has been acquired in between the year, now you have to split the depreciation based on number of days, individual number of days, individual asset. You will split the depreciation. Oh dear God! सर ठीक है. One thing I want you all to answer. One thing I want you all to answer. Assume that the Sai Limited had only one asset, 10 lakh plant and machinery, depreciable at the rate of 15%. On 1st October 2025, 25, yes, 25. Sai Limited amalgamated to Shidi Limited, or Sai Limited, sorry, Shidi Limited is demerged. Sai Limited demerger take place and Shidi Limited is formed. Or Sai Limited was a company, it is converted into LLP. Or Sai Limited was ultimately taken over by some other company. Anything might happen. Any of the four things. What will happen? Listen very carefully, sir. What will be the depreciation for the entire year, sir? Depreciation for the entire year will be 1,50,000 rupees. Depreciation for the entire year would be 1,50,000 rupees. If I am required to split it between the two, it would be nearly 183 days. Sorry, 183 days. 183 and 182. This is how the split is going to be. Nearly, this is how the split is going to be. Can I roughly do it 75,000 and 75,000? Can I roughly do it roughly? Not fair calculation. Can I roughly split the depreciation? Based on this rough depreciation, can I say for Sai Limited, closing WDV will be 10 lakh minus 75,000. That means 9.25 lakh will be closing WDV for the Sai Limited. 9.25 lakh. And on this closing WDV, 75,000 will be depreciation taken by the Shady Limited. That means closing will be 8.7, 8.5. Did you get this point? Did you understand? If we split the depreciation in the entities on the number of days basis, whatever depreciation has been taken by the earlier entity, if we reduce that, we will arrive at the closing WDV of the first entity. If we reduce the depreciation of the old entity, we would arrive at the closing depreciation of the old entity. And this closing WDV will become opening WDV for the new entity. Closing WDV for the old would become opening for the new one. Are you understanding what I am saying? Are you really understanding? Sir, why? Why is that relevant? Why did we understand that point? If any asset has been transferred in case of amalgamation, what is the opening WDV at which amalgamated company will claim the depreciation? Sir, it is the WDV of the amalgamating company. Whatever the amalgamating company leaves the WDV, is that WDV we are going to claim the depreciation. Whatever the WDV Sai Limited has left, that is the WDV on which Shidi Limited would get the depreciation. Same in case of demerger, same in case of 100% parent and subsidiary. Oh, wow, sir. Wow. What did I say? What are the steps to be followed? First of all, assume that there is no amalgamation, demerger, succession, conversion, transfer took place. You just have to calculate depreciation throughout. And on that depreciation, you have to split that depreciation based on number of days into old entity, into new entity. Whatever the depreciation old entity has claimed and reduce that depreciation, this will give you the closing WDV of old entity, and this closing WDV of the old entity would become opening WDV of the new entity. Anything to learn? Sir, nothing to learn. This will be dealt when you understand the questions. Otherwise, this is not much relevant point. Depreciation in case of power generating businesses. See, if you are into power generation business, power distribution business, sir, I told you earlier that they have an option to go for SLM method, straight line method, or they can even opt for WDV as well. If power generating businesses opt for WDV method, sir, what is WDV method? Sir, that we discussed right now. They have an option to opt for WDV method on block of asset system. They will be classified into blocks of plant and machinery, building, furniture, intangible asset. Based on block, they can claim depreciation. For each block, we have understood the calculation process. In case of sale also, we understood cost of asset, we understood how do we account for the additional depreciation, everything we understood. In case of WDV method, we understood everything. What if these power generating companies opt for SLM method? What will happen? So if they opt for SLM method, now the rates that we have discussed is not relevant. In SLM method, now what we do is we assume the salvage value, we assume the useful life, and based on that, we will arrive at depreciation every year. Sir, block of asset system is not followed here. Block of asset system is not followed here. Individual asset is accounted, so there is no different process. There is no same process. Then, in case of capital gain, sir, what will happen? Capital gain is calculated differently. We will discuss. In case they follow SLM, in that case, sir, no additional depreciation is allowed to them. In case of SLM method, they are not given an additional depreciation as well. Additional depreciation is only allowed if you follow WDV method. Apart from that, sir, if cost of asset is taken the way we have already discussed. Sir, how do we arrive at sale? How do we arrive at capital gain in case of sale of asset, in case of power generating business? That is worth discussing. Otherwise, everything is plain vanilla only. Very plain vanilla. How do we do it? Is very simple. One thing is worth noting is how do we arrive the profit in case of sale of capital asset? It is not similar. It is not similar. It is somewhere different. Here, because we don't have any block now. Here we have to account for the individual asset. So here some things are different. Example, let me take an example. For example, there was an asset. There was an asset. Cost of acquisition of that asset was 1,000. Its written down value after 1 year of depreciation is 900. And what if you sold this asset at 700? What will happen? Asset of 900 has been sold for 700. What will happen? So this 200 loss would go to PGBP. This loss would go to PGBP. If there is WDV of an asset and you sell it at a lower price than WDV, then whatever the losses would go to PGBP. Whatever the losses will go to PGBP. Sir, if you sell it at 950, then what will happen? Sir, in case of sale of 950, there is a profit happening. 50 rupees profit happening. This profit would go to PGBP and this is taxable under that PGBP. This will go to PGBP. If you sell it at a higher price, say for example, at a price of 1200 you are selling, provision says whatever the profit you have got over the cost, that means 1200 minus 1000. This is the price you have got over the cost, that means this 200 would be short-term capital gain. Whereas whatever the profit that you have got till cost, that means 1000 minus 900, this would go to PGBP. Got it? In case of power generating business, we have cost, we have WDV. At what price you are selling matters the most. If you sell it below WDV, then whatever the losses would be PGBP. If you sell it above WDV, up to cost, in that case, whatever the profit you make, that will be PGBP. If you sell it above cost, then whatever the price that which you sell above the cost, that will go to short-term capital gain. Simple point. The example that I took is as it is written here. Last point for the depreciation is unabsorbed depreciation. What is unabsorbed depreciation? See, sometimes profit before claiming depreciation is 20 lakh rupees. Profit before claiming depreciation is 20 lakh rupees and your depreciation for the current year is 60 lakh. It is possible. Profit before depreciation is 20 lakh and depreciation for current year is 60 lakh rupees. Sir, what do? I don't have sufficient profit to set off depreciation. What do I do? Sir, in this case, it will be carried forward. And it will be carried forward indefinitely. Whenever you have unabsorbed depreciation, this is unabsorbed depreciation. Whenever you have unabsorbed depreciation, it is carried forward indefinitely. Best part, sir, it can be set off against any head of income. It can be set off against house property. It can be set off against cap gain. It can be set off against other business income. It can be set off against IFOs. It cannot be set off against salary. For salary, we don't allow that. But for every head of income, you can set off this unabsorbed depreciation. Oh, wow, sir. Wow. Profit before charging depreciation minus depreciation, whatever the things remain is nothing but unabsorbed depreciation. It can be carried forward indefinitely. It can be set off against any head of income except for salary. Sir, What will be the order of set off? Always use current year depreciation first. You have to take current year depreciation. If you have any brought forward losses, use that. If after brought forward losses you are still left with profit, then use unabsorbed depreciation because it can be set off till indefinitely. Na? You can set this off indefinitely. So why to use unabsorbed depreciation first? Always use losses first. They are going to expire very soon. Listen very carefully. Sometimes what happens? I have two businesses. One of them is garment business. The other one is shoe business. I have profit in garment business, but unabsorbed depreciation in shoe business. Can I set off this unabsorbed depreciation from shoe business to garment business? Can I do intra-head adjustment in case of unabsorbed depreciation? Of course, sir. Intra-head adjustment is allowed. Lavanya says all these lectures will be available on YouTube for future. Lavanya, these 5 lectures will be available on YouTube. Remaining lectures will not be available on YouTube. Sir, was there any need of this accent? No, there was no need of this accent. I just like these different kinds of accent. Did you understand? Did you understand? Sir, if you have any unabsorbed expenditure, if you have unabsorbed depreciation now, this can be set off against other businesses as well. Even if it is not related to some business, you can set off against that business as well. With that, beautifully, we completed the depreciation component. Now, just tell me, anybody having any doubt in depreciation? In this entire depreciation, if you have any doubt, please let me know. Otherwise, we can move forward to some other different topic. Clear, sir. Clear. Satish says clear. Lubna says clear. What other people say? Any doubt? Diya says absolutely clear, sir. Bilkul clear, clear, clear. Come on to section 33 AV and AVA. Sir, if you are into tea, coffee, rubber business, you manufacture a tea, coffee, rubber in India, then you get a special deduction. What type of special deduction you get? Sir, you get deduction of 40% of PGBP. You have to deposit certain sum to NABARD or 40% of PGBP, whichever is lower, is going to be deductible from your profit. You are going to get 40% of your profits or amount deposited to NABARD, whichever is lower, will be allowed to you, will be allowed to you as deduction. The best part of it is till when you have to deposit, sir, you have to deposit up to the date of ROI or 6 months from the end of the previous year, whichever is earlier. That means up to 30th September or ROI due date, whichever is earlier. You have to deposit this money. The best part, sir, everything is best according to you. Array, your focus is the best thing. You have to utilize this amount as per the manners prescribed by Tea Coffee Rubber Board of India. Tea Coffee Rubber Board of India will say just to throw this money in well, you can throw it. If Tea Coffee Rubber Boards of India says that you can use this money for some machinery purposes, for some expenditure purposes, then you can use that for that expenditure purposes as well. Got it, sir? So there are four pointers. Every SSC who grows tea, coffee, rubber business in India, manufactures, then he is eligible. 40% of the PGBP or amount deposited to NABARD, whichever is lower, up to date of RY, you have to deposit and you have to use this money as per Tea, Coffee, Rubber Board of India. Likewise, we have another section, 33 ABA. Provision says if you are into petroleum and natural gas extraction business, there are certain companies who are involved in this. Good luck to those companies. If you are into petroleum and natural gas extraction business, then you get deduction under 33 ABA. You get deduction under 33 ABA. Now, what happens in this case? Provision says you have to deposit some money to site restoration account. Then we are going to exempt you amount deposited or 20% of PGBP, whichever is lower. We are going to exempt that. We are going to exempt that amount deposited or 20% of PGBP, whichever is lower. We are going to deduct that profit. We are not going to charge any tax on those profits. Here, till when you have to deposit within previous year. Up to the end of the previous year, you have to deposit this money. You have to deposit the money within the previous year. And you have to use this money as per method prescribed by Petroleum and Natural Gas Ministry of India. Okay. Two sections, 33 AB, ABA. This talks about tea, coffee, rubber business. This talks about petroleum and natural gas business. Here you have to deposit some in NABARD. Here you have to deposit some in site restoration account. Here you get 40% of PGBP. Here you get 20% of PGBP or amount deposited. Here you have to deposit up to the date of ROI. Here you have to deposit up to the end of previous year. Here you have to use it as per Tea Coffee Rubber Board of India. Here you have to use as per Petroleum and Natural Gas Ministry. These are the two contrasting portions of these two sections. Now we have to understand similar portion. What are similarities into these sections? What are similarities into these sections? Very carefully listen. Very carefully listen. Very carefully listen. Huh? Provision says whatever the amount that has been deposited, amount deposited, whatever the amount that has been deposited into either it can be NABARD, it can be site restoration account, it can be anywhere. If you withdraw money from that to use, if you withdraw, then use in previous year. If you withdraw money from site restoration account or from NABARD, you have to use in previous year only. So that means if we withdrew money on 1st Jan 2026, till when we have to use it? So 31st March. If we withdrew money on 1st Feb 2026, till when we have to use? 31st March. Sir, if we withdrew money on 31st March only, till when we have to use? 31st March only. Sir, even if you use a day later, that means on 1st April na. On 1st April you would use na, it would become taxable in your hands. If you withdrew money and you did not use it up to 31st March, na, then amount not utilized shall become your PGBP. That shall become your PGBP. Oh my God! Oh my God! Oh my dear God! Provision says, first of all, whenever you withdraw the money, you shall use it. Otherwise, it shall become taxable. Second thing, whenever you withdraw money, that shall be used for the positive purpose. That means purpose prescribed by the Tea Coffee Rubber Board of India. You should use that money for that relevant purpose. If you misutilize that money, it shall become taxable. Sir, what is misutilization? Provision says if you use for any office premises or residential accommodation, if you use it for, it shall become taxable. If you use this money for some office purpose, for some residential purposes, then it shall become taxable. If you use this money for your office appliances, then it shall become taxable. But remember, if you buy computers for office appliances, that is okay. Computers are allowed in office appliances. Otherwise, if you use it for any other office appliances, then it shall become taxable. If you buy any plant and machinery on which 100% deduction is already taken, that will be taxable in your hands. Got it? First of all, if you take out the money from NABARD site restoration, you shall use it in the previous year. Whatever the money you have taken now, that shall be used for, that shall not be misutilized. If you misutilize, it shall be taxable. What is misutilization? Using for residential accommodation, office accommodation, using buying any office appliances, but computer is allowed. Using any asset, buying any asset on which 100% deduction has already been taken. You are not given deduction on this point. Now listen very carefully. Important point. For example, I have a profit. So till when profit has started coming right side? No, assume okay. I have profit of 100 crore rupees. I deposited 40 crore to NABARD. Can I say this 40 crore has been allowed to me as deduction? Allowed to me as deduction. That means 40 crore is that revenue on which I have not paid taxes. Can I say that? Can I say that on 40 crore I have got deduction free of cost without doing anything? I have got deduction without doing anything. On this 40 crore, I am not required to pay taxes. I have also not paid taxes. Don't you think is it the case? 40 crore, I have got deduction for free of cost. For free of cost, I have got deduction. Yes, sir. That's true. That's true. You have got this 40 crore for free of cost. Now tell me, sir, If you use this money for some expenditure, for example, you use this money to pay salaries, to pay salaries. You paid this money to pay the salary. For example, 10 crore you paid a salary. Do you think that government is going to give you again deduction of the salaries? You have already claimed a deduction of this amount, 40 crore rupees. Now, if you are doing any revenue expenditure out of this money, do you think that government is going to give you any deduction? Just try answering it logically. This is how provisions were made. This is how provisions are to be understood, not learned. Did you get this point? If you have already claimed deduction on this 40 crore rupees, do you think that government is going to give you any deduction of revenue expenditure made from this money? Sir, you will not get any deduction. You will literally not get any deduction. Same thing applied differently. Sir, if you have already got deduction of this 40 crore rupees and you buy a capital asset, you buy a capital asset. Sir, if you have acquired a capital asset, do you think that depreciation on this capital asset would be allowed to you? Do you think that depreciation would be allowed to you? If you have acquired a capital asset, if you have acquired a capital asset from this already deducted money, do you think that depreciation will be given to you, sir? It would be taking deduction twice now. So depreciation is also not allowed. Depreciation is also not allowed. What did I say? When amount utilized for revenue expenditure, the deduction of such expenditure shall not be allowed as deduction under PGBP. If you have already claimed it, if you have taken deduction 40% and you use that 40% money, NABARD money, to do any revenue expenditure provisions, that shall not be allowed. If you acquire any depreciable asset from that NABARD money, then depreciation on that depreciable asset would not be given to you. And very beautiful point, sir. If you sell any property, yeah, not property, any asset which has been acquired out of deduction, which have been acquired out of the deduction money now. If you sell it within 8 years, within 8 years from the end of the year, invest reserve has been in the. If you sell the if you sell any asset within 8 years from the end of the year of acquisition, then whatever the deduction claimed earlier was shall be taxable in your hands. Whatever deduction claimed earlier is shall be taxable in your hands. Deduction claimed earlier shall be taxable in your hands. For example, earlier you acquired asset for 10 crore rupees and then you sold it within 5 years. Then whatever deduction claimed you had now, you had claimed the 10 crore deduction, then 10 crore will be taxable in your hands. Got it? Sir, if you transfer the asset to government, local authority, state corporation, then, or if you transfer in case of succession, then in that case it is not taxable. But if you actually sell it now, it is taxable. How much taxability would arise? See, calculate the PGBP provisions as per PGBP provisions. Calculate PGBP. Whatever the PGBP is there, you will have to calculate. Minus 20%, 40% that you have kept for NABARD, just reduce that. After this, you have to add three things. You have to add three misutilizations. First of all, if you put the money outside, if you took out the money from the NABARD and you did not utilize, it will be taxed now, so add it. Second thing, if you misutilize some money, for example, you bought some office appliances, you bought some residential accommodations, so in that case, it would be added. If you sold an asset, that would be added. And after this, there would be split. Sir, what split? See, if you are doing tea, coffee, rubber business, then some portion is agriculture income, some portion is business income. In case of tea, 60% is agriculture, 40% is business. In case of coffee, 75% is agriculture and 25% is business. If you are a coffee maker, if you are into coffee business, who grows, cures, roasts, or grounds the coffee, in that case, 60% is agriculture and 40% is the business. If you are into rubber business, then 65% is agriculture and 35% is the normal business. Actual business. 35% is agriculture, 65 is agriculture, 35 is normal business. In this ratio, you have to split. So always understand. First of all, take PGBP. Then reduce 33 AB, ABA. 40% of course, yeah, 20%, whatever it is. Then add misutilizations. Add sale of asset. Add not utilized amount. This will be your PGBP. This has to be split. Splitting is done only at the last stage. On this, whatever the business portion is, you will be allowed losses on this point as well. You will be allowed losses on this point as well. So this format has to be religiously followed. If there is format mentioned in your book, you can write, you can mark a star point on this. If it is not mentioned, take a screenshot of this format. This should be in your book. Format has to be there in your book. Okay? Take a screenshot on YouTube. You are allowed to take screenshot. Similarly, likewise, I want to give you a DPQ for day. I want to give a daily practice question to all of you. Question number 32. Gomti Limited. Page number 116. Very good question. Very, very good question. Sir, if you take out money from the NABARD or site restoration account on account of closure of any business, on account of dissolution of the firm, then it is taxable in the year of withdrawal. The year in which you withdraw the money, in that year it will be taxed. But if it is on account of liquidation, in account of death of an assessee, in account of partition of HUF, these are considered as natural acts, therefore it is taxed. It is non-taxable. Whenever you want to claim 33 AB ABA, that means 40% deductible, 20% deduction. Whenever you want to claim now, you have to get a report signed by CA in Form 3AC and 3AD before the due date of tax audit. Simple point is section 33 AB ABA, very simple section. 33 AB ABA, very simple section. Yes. Very simple section. Yes, sir. 33 AB ABA is very simple till the time you are stuck to format. If you deviate from format, now there are greater chances your answer would be wrong. If you deviate from the format, there are greater chances that your answer would become wrong. Done, sir. Section 35, Scientific Research. This section talks about two things. You yourself do scientific research, first thing, or you donate to somebody who does scientific research, second thing. Ideally, whenever you donate to somebody, a donation is a kind of personal expenditure. Income tax in no way, in no section is going to allow the deduction of a donation. Ideally, donation is definitely a personal expenditure. Why business is required to do a donation? For a business, donation is not required. It is their personal expenditure. Donation is always disallowed. But here, if you donate to somebody a scientific research, if you donate to somebody who is into scientific research, you are given deduction of that. What did I say? In this section, either you are doing scientific research or you are donating somebody who does scientific research. How do you get the deduction? First of all, if you are doing scientific research, ask yourself, have you commenced the business? Have you commenced the business? If answer is yes, you have commenced the business now. Any revenue expenditure incurred on that scientific research is allowed. Any revenue expenditure is allowed, even if it is a failed research, no issue. So any revenue expenditure on account of research is allowed. Any revenue expenditure, 100% allowed. Any capital expenditure shall also be allowed. You buy plant and machinery, you buy building, you buy furniture. Any capital expenditure is also allowed. But land is not allowed. Why? Sir, because why do you want to claim deduction on land? If you want to do research, you can buy land in a very outskirt area, very free of cost. You will get land, so you do research there. But if you want to do research in, for example, BKC, Bandra Kurla Complex, Mumbai. Or if you want to do research in Chennai's prime location, why we will allow deduction of that land? Provision says no, we will not allow deduction on land. Otherwise, every capital expenditure, every revenue expenditure after starting a business, you can claim. Okay. So if you have started the business now, if you have started the business, then any revenue expenditure would be allowed. Any capital expenditure except for land would be allowed. Sir, but what if we have not started business? What will happen? If you have not started business, so then check in which year you are starting the business. You are starting previous year 25, 26. You might be starting business in any of the upcoming year. The year in which you will start the business now, in that year, for preceding 3 years, that is 24, 25, 23, 24, 22, 23, for 3 years, whatever the revenue expenditure you have made, whatever the revenue expenditure for salary and for material you have made, that will be allowed to you. Whatever the capex you have done on plant and machinery, furniture, building in last 3 years, that shall also be allowed, but land will not be allowed. Land will not be allowed. The rest all will be allowed to you. What did I actually finally say? Started business, any revenue, any capital except land allowed. Not started business, check the year in which you will start the business. The year in which you will start the business, you will get deduction for 3 years, 3 prior years. Any revenue expenditure on material and salary you will get. Other expenditure you will not get for 3 years. Any capital expenditure done in last 3 years will be allowed except land. Wow, sir. This is how you get deduction under section 35. Similarly, you get deduction on donation as well, where you get, sir, if you donate to any Indian company who is into scientific research, 100% deduction you will get. If you donate to a IIT, Indian Institute of Technology, if you donate it, Institute of Information Technology, not Indian Institute, Institute of Information Technology, IIT. My God. Being in commerce, I am making the mistake of knowing the full form of IIT. IIS, Indian Institute of Science, National Laboratory. If you donate it to somebody, then 100% deduction you would get. Approved curie, approved if you are donating to somebody who is approved college, approved university, approved research institute, or approved institutions. All of them, if you donate now, you are given 100% deduction, 100% amount of deduction. Whatever donation you make, that will be allowed to you. Doing business, donating to somebody who does scientific research business. Simple point. Sir, certain considerations to be taken. If you are into scientific research business and you buy a asset, you get 100% deduction. If you get 100% deduction now, remember, you are not given any kind of depreciation on that asset. No depreciation is allowed. If you are into scientific research, you buy a land and building at a composite price of say 10 crore rupees. Provision says, remember, if you buy land or building, you will not get deduction on the entire amount. You have to split this 10 crore into two pieces. Into two pieces, you have to split this 10 crore rupees. On this, whatever the land component is, you will not get deduction on that. Whatever the building component is, you will get deduction on that. On land component, you will not get deduction. On building component, you will get the deduction. Got it, G? Sir, it might happen that I am doing scientific research. My PGBP is just 20 lakh rupees, but my capital expenditure is 80 lakh rupees. Sir, what will I do of this unabsorbed expenditure? Provision says whatever the unabsorbed expenditure is, now take it, assume it as depreciation only. Assume it as unabsorbed depreciation only. You can carry forward it for your life. For your life, you can carry forward. Listen, listen. What if we sell any asset? For example, we have claim reduction and we sell that asset. Wow, wow, what a logic. What a beautiful idea. Tax planning. Tax planning. You register yourself as a scientific research organization. You register yourself as scientific research organization. Buy capital asset, claim deduction, and sell it. Again buy, again claim deduction, and then sell it. Again buy, again claim deduction, and then sell it. Wow. Losses, the losses, only losses. Wow. Provision says If you sell any asset on which 100% deduction has been claimed, if you sell any asset on which 100% deduction has been claimed, sale amount or deduction claimed earlier, whichever is lower, shall be taxable under the head PGBP. Sale amount or deduction claimed earlier, whichever is lower, shall be taxable under the head PGBP. Example: I am doing scientific research. I bought a plant and machinery for 5 crore rupees. I sold it for 4 crore rupees. How much would be taxed? Sir, sales amount or deduction claimed earlier. Sale amount is 4 crore, deduction claimed earlier is 5 crore. Whichever is lower, 4 crore would be taxed in your PGBP. You claim deduction of 5 crore, you are selling it at 4 crore, that means you must have had loss of 1 crore. Ultimately, 4 lakh would be taxed in your hands. Sir, what if I sold it at 6 lakh rupees? What will 6 crore rupees? What will happen? Sir, sales amount is 6 crore, deduction claimed earlier is 5 crore. What will happen? Sir, only 5 crore would be taxed. Cost was 5 crore, deduction claimed earlier was 5 crore. Taxability would be 5 crore rupees. So, sir, what will happen to extra profit? The extra profit would be nothing but short-term capital gain. If you are selling anything above cost, that is short-term capital gain only. Sir, this point is with respect to donation. If you donate it to somebody who is into scientific research, if I donate it to IIT, IIS, National Laboratory, a company who is registered, approved college, university, research institutes, associations, whatever we donate, sir, we do not get deduction on directly. Whenever we donate, now for example, Rahul donated to IIT Delhi. Now IIT Delhi has an obligation to file Form 10BD up to 31st May of the assessment year. 31st May of the assessment year, IIT Delhi has to file Form 10BD. When they will find out the 10BD, now they have to mention the name of the donor, address, PAN, amount of the donation. This is what they have to furnish at 10BD. Once they will file the 10BD now, small forms called 10BE will be generated. These 10BE will be nothing but individual specific. For example, one 10BE will be for Rahul, where his name would appear, his PAN would appear, his donation amount would appear. Similarly, for other donors as well, small 10BE would be generated, and this trust has to do this organization has to send this 10BE to Rahul. This 10BE would ultimately act as a proof of donation based on which I will get deduction. See, if I have paid to somebody, will I get deduction? Right answer is not simply. I have to give the donation. That organization will submit form 10BD. Then 10BE will be generated, and if I receive 10BE, then only I get deduction. Sir, what if? What if, sir, I gave a donation to IIT Dholakpur? If you know IIT Dholakpur, IIT Dholakpur, you have heard of this name. I have given money, I have given donation to IIT Dholakpur. I donated 1 crore rupees to IIT Dholakpur, and day after it went like as if there was no IIT. It disappeared as if there was no IIT. It disappeared. Will I get deduction? Will I get deduction? Sir, if I am a bona fide donor, I will get deduction. Satish, you are laughing. You are laughing. I gave my hard earned money to IIT Dholakpur, and after donation, IIT Dholakpur went, it fled. There was no existence of IIT Dholakpur, not even in my dreams. Provision says if you are a bona fide donor, which means the date on which you gave the donation, on that day, organization was in force, was in existence. Later on, whatever happens to organization, if it is bankrupt, if it is destroyed, if it is fled, even if the status of such organization is revoked, then too you will get the deduction. Dia says Bhim would investigate. Oh, ho, 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 ho. No, Bhim will not investigate. Here, Tuntun Mosi will. Here, sometimes I get so diverted. I really don't understand why I did. Why was the need to why was the need to answer? There was a need to answer just because I enjoyed that. Good point, Dia. Bhim will investigate. Tuntun Mosi will investigate. Come on to section 35 AD. Hold on for a second. 35 AD, it is important. I want your focus for some minutes on 35 AD. Till this point, anybody having any doubt? I was not aware. Na? I thought this Chota Bheem was North Indian show. I was not aware that people in South India also watch these type of shows in Chota Bheem. And of course, everybody is, I mean, adult now. So I did not expect that people watch these type of shows. Good morning, sir. Monica, good morning. Good morning. Shall I come? Acha, Pogo is pan-Indian, sir. Oh, I knew pan-Indian, but I don't know that whether you see that Hindi or not. I mean, I don't know whether you understand Hindi or not. That was the issue. Monica, shall I come and serve a bed tea to you? Shall I come and serve a bed tea to you? Today I missed the class. That is why I'm asking, shall I come and serve a bed tea so that you wake up? So that you wake up and you watch the class? Sorry, no offense, sir. If you missed out today's class, no issue. Just continue from now only. Yeah? You, whatever we are going to discuss, you will understand. Okay? Now, sorry, yeah, sorry. By mistake, now sometimes I get angry and say, I mean, see these type of things. Ki, shall I come and bring bed tea? It is just a sarcasm. Do not take it otherwise. Oh my God, I understood Hindi from Chota Bheem and Doraemon. Wow. I'm not feeling that. Okay, sir. Okay. No issue. That's okay to me. See, if you are not able to attend the class, that's absolutely okay. Just watch it as a bedtime entertainment. Open class, open, watch it, do it religiously, and that's it. Okay. Come on to section 3580, which is scientific business. Sorry, specified businesses. So there is a list of businesses where you just put your hands and that you will get deductions and deductions, only deductions. You will get so many deductions that you will not be able to handle those deductions. Section 3580 talks about those businesses. There is a set of 14 businesses in which whatever expenditure you do towards plant and machinery, towards furniture, towards any of the capital expenditure, you will get 100% deduction in the year of expenditure. Best part of it is, sir, you don't get deduction in land, you don't get deduction on goodwill, you don't get deduction on financial instrument. Why the best part is because it is something to be worth noting. You don't get deduction on land, you don't get deduction on goodwill, you don't get deduction on financial instruments. Got it? Sir, what are those specified businesses? What are those specified businesses? Remember, see, there are 14 businesses, and I want at least 12 of them to be learned by at least 12 of them. And I don't want a retention of 12 businesses. I want just this thing that out of these 14 businesses, if any of the name pops up in exam, you are able to recall that it was a specified. You are able to recall. That is the only thing I want. Nothing beyond that. Okay, done, sir. First of all, you are into a cold storage facility. Okay, you are into cold storage. Simple. You are into warehousing of agriculture produce. For example, you grew potatoes, you grow onions. You are into warehousing of that business. You make a big warehouses and you rent out those warehouses. Sir, edible oil is not a agriculture produce. We are aware of this thing. We are aware of this thing that agriculture is not an edible oil is not agriculture produce. Okay. Do not make mistake of taking edible oil edible oil as a specified business. It is not specified business. Sometimes examiner will try to confuse you. Third thing, laying down cross-country pipelines for transportation of natural gas. Take it as Reliance having pipeline in Dubai to India for transportation of natural gas. In this case, it is a specified business. Fourth business, two-star or bigger hotel. A hotel which is two-star or bigger. Fifth business, a hospital which has at least 100 plus patient beds, 100 plus patient beds, like Kokila Bain Hospital, Leelavati Hospital, Fortis Hospital. Sir, if you are into housing redevelopment, housing project which is slum redevelopment project, housing project which is affordable housing scheme. Seven businesses, sir. First of all, seven businesses are simple. These seven businesses, can you all read it after me? Cold storage facility, agriculture goods warehousing, cross-country pipeline for transportation of natural petroleum and natural gas. Then we have two-star or bigger hotels, 100-star, 100 plus patient beds hospital or affordable housing scheme, slum redevelopment scheme housing projects. These seven businesses are specified businesses. Then these seven businesses are bad ones. Very bad, wala bad. Very bad. Sir, why bad? Because difficult to learn. Out of these seven also, na, three are easy. Three are easy. If you are into production of fertilizers, if you are into sugar warehousing, if you are into beekeeping, these are three simple ones. These are three simple ones. Beekeeping, sugar warehousing, and fertilizers. These are three simple ones. Four ones are very bad. Very bad. Sir, which one? Sir, you are into container depots. Container depot implies, sir, the ships that are used na, for transportation. You make containers for that ships. First one is that. Second one, you lay down the pipelines. You lay down the pipelines for transportation of slurry. What is slurry? So slurry is nothing but liquid form of iron. If you want to take iron from one place to another place, and taking that iron physically is very difficult. It is impossible to carry the physical iron from one place to other place. So it is easier to take it in the form of in liquefied format. So pipeline for the purpose of slurry. And last one is new infra facilities, new infrastructure facilities. So first seven are simple, second seven out of them three are good, and the rest four are bekar wala. What are those? Sir, fertilizers, sugar, beekeeping. These are simple ones. What are the four bad ones? Sir, containers, inland container depot. Then we have slurry pipeline. We have semiconductor wafer fabrication and manufacturing unit. And last, we have new infra facilities. These are 14 businesses. Can you all recall with me? There are 14 businesses, all 14 line by line. You have to recall. You have to say with me. First of all, try recalling the first seven names. First seven names are easy. First seven names are very easy. First of all is cold chain facility, warehousing of agriculture produce, cross-country pipeline for transportation of petroleum and natural gas, two-star or bigger hotels. After that, 100 plus patient beds. After that, after that, sir, housing project under slum redevelopment scheme, affordable housing scheme. After that, three good ones from this seven. Three good ones. What are the three good ones? So fertilizers, beekeeping, and sugar warehousing. Four bad ones, wala bad, very bad. Container depot wala. We have slurry pipeline. We have semiconductor wafer fabrication manufacturing unit, and we have new infra facilities. Out of these 14, out of these 14, can you write 12? Can you write 12? Sir, you don't have to write it down, just type it down. Cold storage facility, warehousing of agriculture produce. Third thing, cross country pipeline, two-star bigger hotels, 100 plus patient beds, 100 plus patient beds, slum redevelopment scheme, affordable housing scheme, fertilizers, sugar warehousing, beekeeping, or for the production of wax. Then four bad ones, container depot, then slurry pipeline, semiconductor wafer fabrication manufacturing unit, and then infra facilities. These are 14 businesses. Just type them out on either Telegram or either type them out in the comment section. 14 businesses at once. Huh? Do not type 14 times. Huh? 14 businesses at once. Just type them down. I am giving you 2 minutes, 2 to 3 minutes. It is 11:16. I am giving you 4 minutes. Till 11:20 you have to respond. Either you have to type down here, or either you can type down in Telegram. Try not watching them. Try not watching them. If you are able to recall even 12, I am okay. Sir, we are only able to recall 10. Arey Baba, 10 only, right? Then look at the answer, then write down the remaining ones. But write down. At least the things should have been out of your fingers so that your brain is aware of these 14 businesses. You just reading and brain forgetting is nothing. It is not acceptable. Your fingers, your hands should be able to write that thing. Beautiful, Dia. Beautiful, beautiful. Cold storage warehousing of agriculture produce 2-star bigger hotel hospitals. Okay. 100 plus patient beds, pipeline for natural gas, petroleum, house, slum redevelopment, production of fertilizers. You have told 8 businesses, Dia. 8 businesses. Achha, I guess there would be a limit as to how long you can type as well. There is a limit, I guess. I'm really not aware. There is a limit as to how long you can type. Honeybee, inland container depot, slurry pipeline, development of new infra facility. Beautiful. I think one you missed out, that was semiconductors one. Diya, semiconductor wafer fabrication manufacturing unit. Semiconductor also would work. That you missed out. That's okay. That's okay. That's okay. That's okay. Meanwhile, somebody who has received their answer sheets for CFLDT Jan 26 want to get the analysis done, you can share it with me if you have received. Cold storage, agriculture, 2-star hotel, pipeline, 100 plus, slum redevelopment, affordable housing scheme, BPP, warehousing, sugar, inland containers, slurry, semiconductor wafer, and infra facility. Beautiful, Yugna. Beautiful. What others are doing? Time is up. Sairam said cold chain facility, 2-star above hotels with 100 plus patient beds, housing, slum redevelopment, honey farming. Okay. Storage of agriculture produce, slurry of iron ore transportation, fertilizer production. Okay. Sainam, even though if your method is good, I will appreciate that, but you should not forget other things you should not forget. That is the bottom line. Like affordable housing scheme, I think that you missed out. You missed out on infra facilities, or maybe there was limit because of which you could not write. There can be anything. Satish sent the message. Cold chain warehousing, store, 2-star hotel, production of fertilizers, slurry pipeline, beekeeping, inland containers, semiconductor, 100 plus, slum redevelopment. Satish, I got only 10. Look at the other four and write them down. Look at the other four and write them down. But yeah, nice, Sainam. Chalo. Moving further, I have to complete this topic today. Listen, whenever you want to claim 3580 deduction, there are certain conditions attached. What are those conditions? First of all, Sir, whatever plant and machinery you are buying should be new. But remember, any imported plant and machinery shall be considered as new only. If you buy imported ones, which is second hand, which is third hand, it shall be considered new only. Any percent of the total plant and machinery, 20% of the total plant and machinery can be second hand as well. That is okay. Sir, whenever you start a business under 3589, it should never be a split off of a existing business or any change in reconstruction of the existing business. For example, I was working as LLP. I realized it is beneficial to switch to a company. I switched it to a company. I converted my LLP into company and wanted to claim deduction. Can I claim? That answer is no. I cannot claim deduction. I cannot claim deduction. I cannot claim deduction by just reconstructing my existing business. Sir, if I am claiming 3580, any depreciation will not be allowed. Very logical point. I will not be given any depreciation. Whenever I buy any asset, you have to make sure that any payment exceeding 10,000 should be done via account, paycheck, demand draft, and electronic clearing system. Any payment exceeding 10,000 will be done via account, paycheck, demand draft, electronic clearing system. Important point, dear, important point. Whenever you have a specified business, profit and losses of such specified business shall be calculated separately. Losses of such business can be carried forward indefinitely, and losses of such business can be set off against only the specified businesses only. Three things. Profits, books of accounts of such business have to be maintained separately. Profit and loss have to be calculated separately. Second thing, losses can be carried forward indefinitely and losses can be set off against only the specified business. My question to all of you. I have hotels. One hotel is Hotel Navratna. It is 4-star hotel established 1990s. 4-star hotel. Another hotel I have, Shri Maya. It is a 3-star hotel established 2023. Here we have a loss of 5 crore, or here we have profit of 12 crore. My question is, can I set off these losses against this profit? Can I set off these losses against the profit? Can I set off the losses of Shri Maya against the losses of Hotel Navratna? Dia says yes, you can do. Soumya says yes, you can do. Lubna says yes, you can do. Right answer is yes, I can do that. Neha also says yes. All the answers are correct. Yes, you can set it off. Why did lawmakers allow that? See, both of the businesses are specified businesses. When you read the Bear Act now, what Bear Act says, losses of specified business can be set off against only the specified businesses. Whether Navratna specified, yes, it is specified. Whether Shrimaya specified, yes, they both are specified. But whether Navratna can claim 3580, no, it is not eligible to claim 3580 because it has been established before the required date. When was the cutoff date? For hotels, it was 2010. If hotels have been established before 2010 now, it is specified. It shall be still specified, but it shall not be eligible for deduction. It shall still be satisfied, but it shall not be eligible for deduction. So it is a specified business, but 3580 is not allowed. This is also specified, and on this 3580 is allowed. Got it? Got it? Basic point it is. Basic, very basic point. Two businesses can be there. Both of them can be specified. One of them is eligible for 3580. The other one is no. The cutoff date should not be studied separately, because if this was required to be studied, I would have already told you. Cutoff date, only thing you need to remember, 2010 to 2017 was the date in which most of the businesses got its cutoff date. Not individually. In exam, when you will be asked, now you will be asked very remote dates through which you will be able to identify very easily. Here 2009 was the first business, 2017 was the last business. These are the two cutoff dates. Mostly you will need to understand this. Apart from that, you don't have to learn any cutoff date. In exam, you will be given 2001 and 2020 only, so that you are able to correlate them easily. These cutoff dates are not expected to be learned from students. Therefore, I did give you these two dates. One is 1990, the other one is 2023, so that you are able to clearly demarcate that one was specified, the other was not specified. Both of them are specified, but one of them was eligible for deduction, other was not eligible. Sir, got that point? Sir, if any asset on which 3580 deduction has been claimed is sold, then entire amount would go to PGBP. Here I come to a very important conclusion where I want you, Rahul, to write down some things. Sale of asset. We have studied three sections till now. First of all was 33 ABA, where it was sold that where it was sold where it was said that now if you sell the asset, then deduction claimed earlier is taxable. Deduction claimed earlier is taxable. Under 35, it was said that sales price or deduction claimed earlier. And under 35 AD, sale price. There is a difference between taxation of sale of asset in all the three cases. Let me take an example. If asset was acquired for 1,000, sold for 700 and 1,200. In all the three cases, let me make you analyze how much answer would change. So in first case, we had claimed a deduction of 100,000 only. When you acquire any asset in the 33 AB, you had already claimed the deduction on the entire amount. Deduction was 1,000. So deduction claimed earlier is taxable. That means taxability would be taxable in case number, sorry, let's reverse it down. Taxable in case of 700 sale would be, sir, 1,000 only. In case of taxability, in case of 1,200, again 1,000 only. But sir, in this case, we are having an issue. We are having an issue. 1,000 only. Here we have issued because we acquired asset at 1,000 rupees and we are selling it at 1,200 rupees. So 200 would go to short-term capital gain as well. This is what the answer would be if you sell any asset at a higher price. Second case under section 35. When you acquired, deduction claimed at that time was 1,000 only. Case 1, sale at 700. Sale at 700. If you sell at 700 in this case, what is taxable, sales price or deduction claimed earlier? Sales price or deduction claimed earlier? Sales price is 700, deduction claimed earlier is 1000, whichever is lower is taxable. That means 700 is taxable in this case. If you sell at 1200, again selling price or deduction claimed earlier. Selling price is 1200, deduction claimed earlier is 1000, whichever is lower, that means 1000 will be taxed. Plus 200 would go to short term capital gain. In this case, sales price is only taxable. You had already claimed a deduction of 1000. In case you sell at 700, then 700 is taxable. If you sell at 1200, then 1200 is taxable. This is how things are going to proceed in all the three cases. Sir, whenever you claim 35 AD, you do not get any deduction under Chapter 6A, Part C, ETIA to RRB. You do not get 10AA as well. There are some specific conditions with respect to different kinds of business if you are into petroleum, natural gas business. First basic condition is you should allow your pipeline for some others as well. For example, Reliance has let down pipeline from India to UAE. So Reliance should let Bharat Petroleum as well to use some portion of this pipeline. I guess it is one third of the pipeline. One third of the pipeline should be allowed to use to others as well. In addition to that, the project have been started by an Indian company or Indian consortium, that is multiple company, and project has been approved by Petroleum and Natural Gas Regulation Board. If you are starting a two-star or bigger hotel, what are the conditions attached? Sir, ideally there are no conditions attached, but sometimes what happens is I transfer my operations to somebody else. For example, I am running a hotel. I am running a hotel at a loss. I am not aware of how to run a hotel. So I outsourced my operations to somebody else. For example, to ITC, I outsourced my operations. Provision says ITC also incurred losses. In this case, losses would be mine. If I'm outsourcing my operations to somebody else, now it would be assumed that I am only carrying out the business. Any profit and any losses would be taxable in my hands only. Outsourcing operation does not mean that profits and losses are outsourced to somebody else in case of hotel business. In case of new infra facilities, sir, what is a new infra facility? If you are having any road, toll road, bridge, railway system, highway project, housing project, related activities, water supply, water treatment, irrigation, sanitation, sewage, solid waste management, port, airport, inland waterway, and related activities. These are infra facilities, new infra facilities. What are the conditions? Sir, it should be done by Indian company. It should be approved with central government, local authority. These are the basic conditions. 35 AD, we don't have such specified conditions. Important thing, last point is what will happen in case of sale of asset under 35 AD? What will happen if I sell any asset under 35 AD? What will happen? To be honest, what according to you should happen? Sir, if you transfer an asset to not actually sale, but if you transfer any asset, sir, if you actually sell any asset, we have studied that sales amount goes to PGBP. If I have any machinery on which deduction has been taken, if I sell it now, then sales amount shall go to PGBP. We are aware of that. Sir, it is also possible that machinery on which we have claimed a deduction is destroyed. What will happen? Sir, in case of destruction, whatever insurance money that we receive, that will be taxable. If we don't receive, nothing will be taxable. Sale of asset, destruction of asset, whatever sales money we receive or insurance money we receive, that is taxable. Sir, what if we transfer asset to other businesses? What will happen? Very carefully listen. Very carefully listen. If I have if I have a two-star or bigger hotel, and I'm transferring assets from my hotel business to other businesses. For example, I have beds, I'm transferring that to some hospital, which is 100 plus patient bed hospital. That means if I'm transferring from specified business to specified business, then there is no tax treatment. There is literally no tax treatment. If there is transfer of asset between the two specified businesses, there is no tax treatment happening. No tax treatment happening. No tax treatment. No tax treatment. Sir, if you are transferring it to non-specified business, this is an important case. For example, I was having an hotel. I was having a hotel which was 4 star. I transferred some of the assets, some of the plant and machinery to a newly formed 1 star hotel. Newly formed 1 star hotel. Sir, it is a violation. Either you can sell them, either you can transfer it to specified operations, but now you are transferring it to non-specified businesses. What will happen? For this, you have to check till when you have transferred. Are you transferring after 8 years of acquisition? That means whatever the hotel has transferred was already used for 8 years. Any machinery was already used for 8 years, and this is being transferred. Is it the case? Is it the case that you are transferring after 8 years from the year of acquisition? Sir, in that case, now there is no tax treatment, no PGBP, no cost of acquisition. Zero will be cost of acquisition for this new business. Zero PGBP, zero cost of acquisition. Very simple point. If you are transferring any asset to a non-specified business after 8 years of acquisition, in that case, there will be no tax treatment in the hands of the transferor and zero cost of acquisition for the non-specified business. Simple point if it is transferred after 8 years. But what if it is being transferred within 8 years? Let me take this with an example. There is a hotel which is 4 star, and there is another hotel which is 1 star. Both of them are commonly owned by Rahul. There is a plant and machinery which was acquired in previous year 22-23 for 100 lakh. And this has been transferred in previous year 25-26 to this has been transferred in previous year 25-26 to this new entity, to this 1 star hotel. What will be the tax treatment? Very carefully understand, very carefully. Sir, if we had acquired this asset, we would have claimed a deduction. Already 100% deduction is claimed. Already 100 lakh deduction claimed. Yes. Yes, sir. Assume that there was no 35 AD. Assume there was no 35 AD. How much would have been WDV of this plant and machinery? Sir, in previous year 25-26, 23, 22-23, you would have had 100 lakh minus 15% depreciation, that means 15 lakh. This would have been value as on 31st March 2023, 85 lakh. Minus 15% depreciation, 12.75. And this would be the value as on 31st March 2024, 72.25. Minus 15%, 10.8375. 61.4125. This would be 31st March 2025. This would be the value. Yes, this would be the value. If any asset has been transferred, if any asset has been transferred to a non-specified business within 8 years, you have to calculate the WDV as if there was no 35 AD. As if there was no 35 AD. Whatever the WDV is arrived now, this shall become taxable. This is taxable. 61.425. Sir, why this is taxable? Why this is taxable? Why this is taxable? Sir, you have already claimed 100 lakh deduction. 61 lakh is being taxable. So ultimately, indirectly, you got deduction of depreciation. You got deduction of depreciation. This amount which is being taxable, this will become cost of acquisition for non-specified business. This is what happens in case of transfer of asset from specified to non-specified. You have to assume that there has no transfer took place. Assume that there is no 35 AD. You have to calculate the WDV. Calculate the WDV. Whatever the WDV turns out to be as on 1st April of the year of transfer, that shall become your PGBP. Similar PGBP shall become, similar amount shall become cost of acquisition for the newly formed business. Same thing, deduction claimed earlier, that may 100 lakh minus notional depreciation, whatever it was. WDV turns out to be 61.4125. Like this is the PGBP. Same thing shall become cost of asset. Same thing shall become cost of asset for the new business on which depreciation will be allowed. Section 35 AD done. Anybody having any doubt? Sir, it is possible, 3581.1 point, it is possible that you have got registration. You have got registration under 35 AD. You have started buying the assets, but you have not commenced the operation. It is possible now that you have bought the assets, you have got the registration under 35 AD, but you have not commenced the operations. Provision says you will start getting deductions from the year you commence the operation. You will start getting deduction the year in which you commence your operation. You will start getting deduction. Got it? You will start getting deduction from the year you commence the operation. Sir, what if operations have been commenced? So you will get deduction directly. This is 35 AD. Let me take you to the table. Where do we stand right now? Where do we stand right now? Sir, we understood these three sections. We took sufficient time to understand depreciation as well. 33 ABA, 35, 35 AD. Significant portion was done today. Tomorrow we have to discuss a longer portion. These sections look bigger in quantity, but these are not in fact very big. These are sections very logical. Most probably tomorrow we should be able to complete this PGBP. Mostly we should be able to do that. That was the last class on YouTube today. If you really enjoyed and you have not enrolled, do consider enrolling. If you have already enrolled, you must have received the access. If not, message me out. I will talk to team and you will get access tomorrow. Whatever the cases, your DT is in safe hands. You don't have to worry at all. Just you have to come. You have to solve DPQ. You have to just read it, what we have discussed today. Try processing the things. Try participating in the class. And if you have any doubt, just message me out. I will be there to respond. That's all from my side today. See you guys tomorrow with same energy, excitement, enthusiasm on the same time with more positivity and enthusiasm, because tomorrow I have a bunch of good questions to be asked from you all where I personally think that you are going to stuck. So if you think that you are already good with PGBP, let's see what happens tomorrow. Bye bye. Have a great day.